I just want to talk about some ground rules, guys. So once you join here, the fact that you're already here, please like this video. Like the video, subscribe. Just do it now before we start. So subscribe to the channel, like the video. Please share the link. Share the link around to everybody in the group. I know you're coming from some group. There is a FAC group somewhere. So please. Let's do it now before we start. All right. Share the link. Okay, guys. I know you're coming from some group. There is a FAC group somewhere. Okay, guys, like I was saying, yes, welcome. First thing first, let's get the ground rules out of the way. Like the video, share this link with the group that you are in. I'm sure you're coming from some group somewhere. Share the link with everybody you know. Let them come, guys. Let them come. This is your opportunity to score high. By this time around, I'm sure you have picked up all the mistakes that you have done. So this is your opportunity, guys. This is your opportunity to do well. All right, so I hope you are liking. I hope you are liking, guys. You're welcome. Hello everybody. Hello, hi. Hello, hi. Thank you for joining. Okay, awesome. Right, thank you guys. Right, so let's get going. Please, what do you need for this class? I am gonna work through the assessment 10 of 2023, last year's assessment 10, which was the alternative assessment as well. The alternative assessment I did last year, that's the one I'm gonna work on. So please go and you can have it ready. I've also put the link to the question on the description. So check the description, you will see the link to the question. All right. Yes, you see the link to the question. Check the description. Yes, so have the question ready. Open the question. It's assessment 10 of last year that I have there. You need to have a notebook where you're going to be writing as we are going. Have a notebook, have a pen, have a calculator. My God, guys, it's a sin not to have a calculator. Like a sin. All right, there's no way you can do accounting without a calculator. So please have a calculator with you. Have a pen, have a paper or a notebook where you are writing, and have the question paper. Like I said, I repeat again that I have put a link of the question paper in the description. Under the description, so please go and click on the link to get the question with you. But if you do have it as well, it also should be on my UNISA as well. It is the assessment of last year, assessment 10, which was the alternative assessment. The reason why I'm using this question in particular is because it's the same standard, so we're looking for the same kind of question that we want to work on as well, so you guys can feel the standard, what you expect in your assessment 6, which is the alternative assessment. Like I said, it's not a must for student to write it, but it's a very good opportunity to write it, and I advise every student to write it. Even if you feel like you did well, just write it. You never know which paper is going to do better. Don't we all want better result? Don't we all want distinctions? So it is your opportunity to hit that distinction. So I advise every student to write it. Okay, all right. So you all have the question, and that's about it. Now, again, for those of you that's just joined, if you are just joining, the ground rules are that you like the video, that you subscribe, and that you share the link. Those are the ground rules if you're just joining. Okay, and also just send a heart there and there. As we go through the class, remember to ask your questions. All right, put your questions on the comment section, and every time I finish with a particular question, after I've finished doing it, then I'm going to pause and come and then answer the questions. Okay, so after I'm done, I'll come and answer the questions. So as I am teaching, if you have questions, keep putting the questions down, keep writing your questions down, and I'll come back to answer. All right, guys, I'm going to give a little bit of advice. Before we get to the question of today, which is our assessment 10 of 2023, the alternative assessment, same standard as what we are going to write. All right, before we get into it, I just want to advise you guys a little. Let's just have a little bit of chit chat, guys. Exam techniques are very important. All right, please take note that accounting is not only testing knowledge, they're also testing speed. It means your ability to actually answer question with a fast speed, like fast. All right, so remember, accountants are problem solvers. All right, so the company is basically relying on you when it comes to any financial matter, any financial consideration in the company. So they are relying on you, and if there is any issue like that, they expect a result like ASAP. You understand? So that is why even with us, in our as exams or assessments, should I say, continuous assessments, even in assessment test exams, you are timed. All right, and you have to be able to actually write within the time period that is given. Now, most of the students don't actually finish accounting paper generally, in general, so you're not alone. Don't feel like am I not good or not, don't question yourself or anything like that. You're actually not alone. All right, you are not alone. A lot of students do not actually finish on time, accounting students, especially accounting paper. I'm talking about financial accounting, even management accounting, but I'm talking about financial accounting today. That's what we are doing. Most students don't get to finish, and so that's what I'm saying, guys. They are testing speed and your ability to answer. So knowing the knowledge, understanding principle, and ability to answer fast, or rather on time. Okay, so you have to be like, all right, application, you should be fast enough to do your application. So guys, when you are practicing, when you are studying, make sure you're timing yourself. It's very important. I know the lecturer says that we hardly do it. Like, I mean, who does that? But anyways, guys, it works. Okay, time yourself. Please time yourself when you're doing questions. Let's see how much you can do. See how much you are able to answer on time. It's very important. Very, very important. Okay, how much are you able to answer on time? If sorry guys, if you never ever answer question without within the required time, that means there's a high possibility that you will not finish your paper on time. All right, unfortunately, there's a high possibility that you may not finish your paper on time. So that is it, guys. That is why we are saying, we're insisting that make sure you do your things on time. Like, make sure. Okay, anyways, let us continue. So the timing, we spoke about time, exam technique. So you're studying with your time, guys. Focus on the aspect that you know you're not good at. If you know that PPE is my issue, then PPE should be given serious attention. If you know that discussion is your issue, then you need to be able to work on your discussion techniques. All right, check the past papers, check the question bank that you are given, which has solutions. How are how do the lecturers structure the discussion? How do they structure it? If I can look at 5 different questions, I'm able to pick up the structure, like the technique. What technique does the lecturer uses when they are answering discussion questions? Then you will learn from there. Okay, so when you are studying, it's always good. That's why I love the question bank, is that you do the question, you actually have a solution which is directing you on how you can continue, on how you can answer on the exam, and what is expected, because these people that are doing these solutions are the people that are doing the exam questions. So this is the expectation. In other words, they're trying to tell you, this is the standard we're looking for. All right, this is our standard. This is what we want. This is how we want it. This is the format that we wanted. So if you are practicing questions, the more questions you are doing, the more you actually get to know. So I always tell students, I always advise students that the more time that you are actually spending in question, the more you are actually getting closer to passing. So if you are a student here and you have not been doing many questions, you are not doing well, guys. You're not doing well. All right, you will have to be sitting there and doing questions. So even if you get stuck, that's why I'm saying use the question bank. You do a question, you check the results, you mark yourself. That's how it works. It works wonders. Okay, so please work on that if you have not been doing many questions. But how is that even possible? You guys wrote an exam. Guys, assessment 5 is the exam. It's the exam. I'm sure you saw the standard was much higher. It is the exam. So for you to get there, it means you did study. So in this point, I'm talking to people that have already studied. So I understand I'm not talking to anybody who has not studied, because it's impossible. You guys wrote about what, 4 assessments before we get here. So we understand that you have been studying, and that's a good thing about this module. So what they actually did is they're trying to prepare you ahead for CTA. They're preparing you ahead for CTA. It was continuous. So you wrote throughout the year. Every time you're writing, you're being forced to study. Because guys, we know ourselves. Let's just be honest. Let's just be honest. We know ourselves, guys. You know yourself like you know yourself. You know that you're not going to study if there's no test. Am I lying? I don't think so. You're not going to study if there's no test, okay? There are people that are dedicated. They actually they dedicate their studying. They're actually consistent. They have a timetable that they're using, and they are actually sticking to the timetable. There are people like that, but majority will wait for an assignment, will wait for a test before they study. So this structure was actually good. It's preparing you guys ahead. It's saying that, okay, guys, you are writing tomorrow, so you already, if maybe 30% of the syllabus is being written, you've studied that. Then we take you to the another 30% you studied. We take you to, by the time you get to the exam, you were forced to study. All right, but now knowing how to study matters. This is an application module, is a practical module, meaning you cannot be sitting there and just be reading without applying. It's about applying. You may know the principle, but if you cannot apply that principle, then it's as much as nothing. So you say, I'm studying, but I'm failing. No, you're not studying right. You're not studying right. Are you studying? Are you doing questions after reading through the principle, summarizing it and understanding it? Are you applying it? Okay, so application is important. Again, I insist, do as many questions as possible. All right, so I touched on the exam technique. And then I want to touch on yourself, guys, your mental health. How is your mental health? How is your mental health, guys? So I want us to just talk about this before we get to the question, like we actually get to the revision. All right, so stick around. Just want to advise you, how is your mental health? Please write to me on the comments. How is your mental health? I'm sure by this time around you have written so many papers, you have studied, and the results are probably not promising. Maybe they're not giving what you have actually put in. I understand. Every student at some point will go through that. It happens, okay, especially that you've been having a lot of continuous assessment, not only in financial accounting but also in management accounting, in taxations, and in auditing. So I understand where you're sitting in right now. Your mental health is probably not okay. All right, but that is also very important when it comes to exam. You have to be calm. You have to have confidence. I always tell students that confidence equals pass, great results. Confidence equals great results. Now, it's not confidence alone. Remember, it's confidence after I have studied. Because you can study, but because you're not confident, you end up failing. You can know your principles, you can know your knowledge, but just because, just because, guys, just because you are not calm and just because you are panicking, you can fail with your knowledge. All right, so it's very important. Your mental state. How is your mental state? Very, very important. Very, very, and like very, very important. Okay, so please work on that. Work on the fact that once I studied something and I've gotten it right, I know it. I'm not going to panic. I'm not going to allow anything to make me scared. I'm not going to allow anything to intimidate me. Accounting, you're not going to intimidate me. All right, so that's basically, please remain calm. Please remain calm. I don't know what you do. Do you listen to music? Do you pray? Pray. I really recommend praying. Pray before writing, even before studying. Just pray before studying. Ask God to keep you calm, to give you wisdom and all of that. Pray before that. All right. I really recommend that. All right. So please, guys, do that. Listen to some music, meditations, or whatever. I don't know what you do. Is it exercise? Is it gymming? Do something, all right? Just gym, but make sure you are not panicky. Like, you shouldn't be shaking. If this is what you're doing before writing, guys, there's a problem, because it's gonna block your brain from working. It's gonna block your brain from working. So please, I really advise try music, slow music, try gymming, exercising, running. All right, yeah, we know they say when you sweat, actually you sweat the stress away. Is exercising, gymming, running, walks, taking walks, yeah, but also just talking to yourself, you know, self-motivation, telling myself I studied, I did it, I gave my best, now I'm gonna go out there and I'm gonna get the results. It's very important. So I insist, guys, you have to remain calm. You have to remain calm. For you even to apply the exam techniques, well, you have to remain calm. Do not panic. Panic does it's blocks, like brain block. It will just do a brain block on you, and guys, that's not what we want. Okay, that's not what you want. Okay, so just try remain calm. And then I spoke about time, guys. You have to be conscious of time, even when writing. Okay, be conscious of time. Now, what do? I would advise that you always start with the questions you're able to do. Like, all right, if I can read this question now and I'm able to answer it immediately after reading it, then it's the question I'm starting with. Okay, so you have to be like that. Be strategic, guys. Be very, very strategic. Start with the easy questions first. Any question that it requires me to read it 3 times before I answer it, it should not be my first question. That means it's already telling me that I'm not going to start with you. I'm going to leave you alone. Again, remember what we're saying. So they all link together. I just spoke about remaining calm. If I start an exam with a question that is difficult, which means I have to sit around, I have to sit first and figure out what they're doing and figure out how to answer and try to remember. If that's what I'm doing, it is already a wrong question to start with. It means it's going to kill my confidence. It's going to take me to a panic mode. And when it takes me to a panic mode, there may be a brain block. And that's what we don't want. So mental health is very important. All right. And then, so that's what I'm saying, keep conscious of time. So while you're writing, keep conscious of time. Check how long you're taking in. You know, after some time, check your time to see how long you're taking, because you may just spend the whole 3 hours answering one question and probably it's just like 20 marks, and it's not strategic, It's not strategic. So the main strategy is that start with the questions that have the most marks, but it should be the questions you can answer like. So all the easy questions should be done first. All the easy question first. You do them quickly, things that you're very comfortable with. And you know what it does? Again, it goes back to work on your mental health, goes back to work on it. So it means if I can do it like, and I boost my confidence, oh, that means the paper is good, I'm passing this. You understand? You need that energy so that when you reach a question that is difficult, you will come in with a good attitude. I don't know if you guys are understanding. All right, you will come in with a good attitude. So you do the easy question, then you get the confidence. Now you do another question that you feel like, okay, maybe this is not too easy, but it's also, you know, okay, I can still do this one well. Then you are just boosting yourself. Then when you get to those killer, so every paper has those. There are 3 levels in every paper. There is going to be a question that is going to be easy. You know, sometimes they try to make it maybe general knowledge or something, but it's usually small marks. And then there's going to be a question that is okay, but it maybe required you to study. If you have studied, you should be able to answer it. Then there's going to be that question where they're going to make it tricky. That there is going to be a tricky one. All right. So if I have boosted my confidence, if I have worked my strategy very well, and I get to that part and I'm coming with a confident attitude that if I was able to answer that question right, I'll be able to answer this question right. Then I will sit on it now. I've already gotten marks on my easy questions. All right. Then I'm dealing with this monster. Should we call it monster? Then I'm dealing with this monster. So it means now, hey monster, I'm ready for you. I'm here to make sure I overcome you. I'm choosing my words right, to make sure I conquer you. All right, so that's what you're saying. So basically, you get to the monster, now you break the monster down. You break it down. You come in with confidence. You're sure of yourself. You're sure you know what you're doing. You're sure you studied. Then you come there and you give it your best. If it happens at any cost that you still feel like you have not broken the monster right, you have gotten your marks already. Remember, we started with the easy things. Okay, so that's your strategy, guys. That is your strategy. That is what you actually should implement in your paper so that you can do very well. Remember, again, be conscious of time. Another thing that has been a concern, like a serious concern, I don't know if we should start crying now. Is it like a funeral or what? There's been a serious concern. People are not submitting. Majority of the students are not submitting, which is then a disadvantage of online exam, because it doesn't happen with the physical exam. I mean, they will take the paper away from your hand. They'll just pull it. You understand? So that is another disadvantage of an online exam. Majority of the students are not finishing the paper. Guys, majority of the students are not finishing the paper, and it is a serious concern. So please, guys, like I said, keep checking your time. If you feel like, okay, I've taken enough time here, I'm leaving this question, it's not working, I've tried it, it's not working, let me go try another question, maybe I'm going to get my marks there. So please do that, okay? If it's possible like that, please do it. You see, my voice has even gone down because it is a serious concern. A lot of students are not finishing the paper. Imagine after working so hard, studying, attending classes, attending revision classes, studying with your study partners, not sleeping, studying the whole night, only for you to actually write well. And the worst part of this, most of these people that don't submit are actually enjoying the paper. That is the reason why they're staying too long. Others is because they are struggling. That is why they're taking too long. So there are two ways to it. So either you're enjoying the paper, you just want to write the most you can write just to get that distinction. And then there's others that are just not figuring out anything. They're just trying to push and push just at least to get some marks. And all of those extremes, at the end of the day, there's nothing to submit and it's a complete zero. So all the effort goes down the drain. Okay, I'm advising that, guys, 30 minutes, at least let's make it 20. Okay, 20 minutes left. Once you're left with 20 minutes, stop writing. Submit what you have. It is better to get a 50 than to get a 0. It is better to get a 60 than to get a 0. So if you're pushing for a distinction and then you have at least your 50, but there's no time for that distinction, just give it. Get that 50, okay, and pass the course. It's okay. It's fine. You've passed. All right. You try again next time. So you have to get to that point, especially for those of you that are looking towards CTA. If you are looking towards CTA, you have to learn that. Okay. Sometimes you have to learn to accept situations. All right. You may not be getting those great marks that you're looking for, but you have to pass. That's the most important thing, is to pass. So if I can get to my pass, submit, please. Submit. Even if you feel like you have not really passed or whatever, you've not really, just submit. You never really know. Sometimes you may feel like you're not writing well only to see your result actually good. It happens. So submit, guys. 20 minutes left. Once 20 minutes is left, you stop writing and you submit whatever you have. It is better than getting a 0. Please. We've had this concern. A lot of students are crying after the paper, and it will break you down. And guys, this is it's a festive season. You don't want to get into a festive season frustrated because you couldn't submit your last chance. This is our last chance to increase our mark, our final mark. If you do not do well in the assessment 5, you have assessment 6 as an alternative, so that you can push your marks. Okay. So guys, that's basically what I wanted to talk to us about. Yes, that's what I wanted to talk to us about. And also just to thank you guys, those of you that are here. This is going to be really beneficial for all of us. It's going to be very beneficial. And I'm going to repeat again, because in case some people have joined. Guys, remember the ground rules are that you like the video, you subscribe, and you share. All right, remember, for you to comment, you have to be a subscriber. Okay, you have to be a subscriber for you to comment. And again, this is how it's gonna be. I'm about to start the question with us. So if you're just joining now, I'm doing the last year's assessment 10, which was the elective exam. The reason why I'm doing that question is because it's the same standard with what you guys are gonna write. Okay, it's going to be the same standard, so I want you to get used to the standard of the question. All right, so I'm doing that. I've also linked the question. I've put a link of the question in the description, so you can check the description. You will see the link of the question, so that you can use it while we are busy working through. So I want you to work along with me. Have a pen, have a paper, have a calculator, have a notebook where you're writing along. And when you get questions, while I'm busy with a question, write your questions on the comment section, and when I am done, so every single question I do, once I'm done with it, I'll come back to ask you guys or to answer the questions that you have asked. Okay, so please be active for it to be beneficial, and stick along, guys. Stick until the end so that it can give you more value, right? So be active, don't just watch. Have your pen and paper and be following along as well. Follow along and put down your questions so that I can answer you guys and it can be beneficial for everybody. Okay, guys, once again, thank you so much for joining. Let us get going. All right, I'm going to switch off my camera so I can put on the question, and then we're gonna focus on the question. All right, and once I do one question again, I'm gonna come back again to ask one question. I come back again to ask. So just put your question so don't forget. Whenever you get a question while I'm busy, just put your question down. All right, then we go. All right, okay, guys, let us go. It is time now to work. Let us go. Okay, I'm just gonna put my camera off and put the question that we're working on. All right, so this is our question. Let us now get going. Okay, so like I was saying, guys, we are working on assessment 10 of 2023, and I have put the link of the question on the description in case you don't have it. Yeah, otherwise the question is on my UNISA. All right, so you have the question on my UNISA. You can also access it from my UNISA. All right, so what do I do when I am presented with a question? Now, first thing first, guys, you know that you are supposed to what do I want to say? Oh yes, first of all, guys, you know that you are supposed to understand your invigilator, how to use your invigilator app, how to use, I don't know what you're gonna use during your exam. Please learn all of that. Read your announcements. Okay, what announcements have the lecturers given? Please read through your announcements and understand whatever you are using for the exam. Okay, is it an invigilator app? Is it Moodle? Or is it what is it that you're using? Okay, so this is how the paper was looking last year. It was also written in November. It's 100 marks for 3 hours. Okay, we spoke about time strategy is very, very important. Very, 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 very I don't know how to insist this. Very important. Remember, you're an accountant. They are testing knowledge and speed. All right, so that's it. Then testing knowledge and speed, not just knowledge alone. How fast can you answer a question? How fast are you able to answer a question? Okay, that is what they're basically testing. All right, so these were the instructions, guys. You can read the instructions on your own time. I want to get to the question, and then here it was explaining to you how to use your invigilator app, and also it gave you guys the code to scan. I'm not so sure if it's the same for everybody, but please just scan from your paper. Don't scan from somebody else's paper. I don't know. But just, yeah, you never know. What if these codes are actually different per the paper? Okay, that we do not know. I'm not confirming. I'm just saying. Anyways, then we get to the question. All right. So if you look at this question very well, I wanted to see if they give a structure. All right. If you look at the question very well, we have question 1, which is 50 marks. That is already half the paper. And then we have so it's question 1, and then we have question 2, which is another 50. So it's a 50-50. You have 50 marks for question 1 and 50 marks for question 2. All right, so it means there are quite a lot of topics that we did, about 15 or so, plus minus 15 topics that we did. They fused them together, guys. That's what accounting is gonna be like. Okay, it's gonna be like that they will fuse the topics together. So it's rare, very, very rare, that they will just test one topic on its own. Very rare. They will fuse it together. We need to have the ability to learn how to use them together. All right, how do we do the questions together? That ability is very, very important. Okay, guys, I repeat, as I'm busy doing the class, if you have questions, please write on the comment section. Remember, you need to be subscribed for you to be able to ask your questions. Okay, anyways, let's continue. And so they will fuse the question together. That is why we say when you're practicing, practice from the question banks, practice from the previous assessments, practice from the previous past papers. All right, so that you are able to figure out how is it that they will ask fuse the questions together, an integrated paper. So get used to answering an integrated paper. All right, basically that is it. Then let's get going. So once I have my questions like this, I know it's a 50-50 situation. All right, so you don't really have much of a choice. You can start with question 1 or 2. That's the only 2 options. You cannot mix them. If I'm doing question 1A, I cannot go to question 2B. All right, that they don't want. I can start with question 2 or question 3, whichever, but it has to be a full question. Like I'm either doing full question 2 or I'm doing a full question 1. I cannot mix them together. If you do that, guys, you are standing a chance of losing a lot of marks. Please don't. You will lose a lot of marks if you do that. Okay, so let's get going. I have my question 1 now. What next thing I do? Required. Before you read the scenario, please read the required. I know when you get to CTA, it will be the other way around. They want you to read first and then read the questions and all of that. But I really advise, it works so much better when you read the question. So that when I go to the scenario, I know what to look out for. When I'm reading the information, even in my head, I know behind my head that I'm looking for 1, 2, 3. Now, the approach you do is to read all the required questions, all of them. Because sometimes you can actually do them together, which is actually an exam technique for you to finish on time. It's a very good exam technique to be able to finish on time. All right, so let's do this. So now, here are my required section. I'm going to read them all together. Then I'll read the one I want to answer when I want to answer. Okay, let's have a overall idea of what is being required of me. So it says, the first one, prepare the correcting journal entry or entries, if any, in accordance with IS 38 intangible assets. Already telling you where your focus should be. Your focus should be on intangible assets. You are doing not just journals, guys. It's very important that you understand this word, the word correcting journal. All right, this changes the meaning of what it would have been. If I am recording journals for the very first time, it's different to when I'm correcting journal. When I'm correcting journal, it means the journal, all right, it means the journal is already in place. They have done the journal, they have recorded the journal, but you know, it was not done correctly, or maybe there was an omission, there was something that was missing, something just happened. All right, so now for us to be able to do this journal, you have to first of all understand what was done, then fix what was done. Okay, so if for example the bank amount was 100,000 but they only recorded 40,000, my journal cannot be 100,000 anymore. I am going to put in the difference. So they only recorded 40,000. What I have to now do is to record the next 60,000. So you see the journal has changed. Now your thinking here has to change. So most students, people will rush, especially if you're panicking. This is what I was discouraging panicking during exam. I discourage it for this reason. If you are panicking, you will probably miss the fact that they said you're doing a correcting journal, so you just jump into doing a full journal. And the journal would have been correct, but it's no longer correct. Do we understand? It would have been correct provided that you were recording it for the very first time. But now you are basically recording something that was already recorded. You understand? So you need to know what was recorded and what is it that I have to do additional or reverse. Am I reversing this? Am I correcting it with an amount? What exactly am I doing? You are fixing something that was done but not correctly. Okay, so that is the difference. Please pick this up. If you miss this, you miss the question. All right, so you were supposed to do that journal to account for the cost incurred. So they give you more details. The instruction is that you're preparing journal entry. You're preparing journal entry. Keep your mind in IS 38, which is intangible assets. So that's where you're keeping your mind. So you need to think more about intangible assets. This is where studying of the principle now will come in. So I understand that intangible assets is a non-current asset without physical substance. All right. It is also not an investment. It could be, you can look at it as an investment by saying that I'm saying it's not a financial instrument. Yes, it's not a financial instrument and it is not a physical asset, but it's a non-current asset. All right. Examples are like your registrations, your softwares, patents, designs. Those are your examples, right? Intangible assets has a similar accounting in comparison to PPE. They are very, very similar to PPE, property, plant, and equipment, because you are going to look for costs and you are going to calculate that you're going to calculate the loss in value. In PPE, we refer to it as depreciation, but in intangible asset, we refer to it as amortization. There's also a possibility of an impairment loss. You have to also check how has the recoverable amount been. There's a possibility of that as well. So those are the things you have to put in place. So it's me now doing some. You're not actually doing it. But this is a revision class. In the exam, you won't have time to be talking like what I'm doing. But once you know it's IS, you sort of prepare your mind in what IS 38 is all about. Okay. So then it says to account for costs incurred in relation to the patent for the financial year ended 31st March 2023. Guys, I always say this to the students. If you do not know your financial period, you've already failed the paper. Like, I'm going to say it like that. There is no way you can do accounting without understanding the financial period, because we are working within a 12-month period, and that period can end any day. So now we know that for this company in particular, their financial period ends on the 31st of March 2023. It means it begins in 1st of April 2022. So whatever I'm doing right now must fall between April 2022 and 31st March 2023. Anything before or after that should not be included in my financial statements, or what is it that I'm doing. Now, if you do not know your financial period, my God, there's no way you're even going to move, because you put in the wrong things that are not supposed to be there. Okay, so it's very important. Financial period should always be understood every time you're dealing with accounting and in every level of accounting. All right, so that was the first question. This is 7.5 mark. I believe this is, I could put this as part of the easy marks, right? It also depends on you. How good are you with your intangible assets? I could put this part of the easy marks. It means I will start with this one because this is easy. Okay, but like again, it also depends on you and how well you understand the topic. Then they're saying general narrations are not required. Most of the time, general narrations are not required, but there are times it will be required. So don't assume. Never assume, guys. Never assume anything in the exam. Read the question. All right, just don't assume that they don't always ask us to do general narration, so I'm not gonna do it. Don't assume. Okay, then it says you do not need to indicate any date for the correcting journal entry or entries. They're not interested in the dates, but I always advise students to put dates. The reason why I advise students to put dates, think about it, guys. Journal entries is more, you're being like a journalist telling us what happened in an event. Okay, you know those reporter, you're like a reporter, you're reporting on this date, it rained with so degrees Celsius or whatever. So you are actually reporting. With journals, it's the same thing. You are telling us what happened on this day, what transaction happened, and how should this transaction be accounted for. All right. So I always advise dates, but now they don't want it. So they don't want it, don't put it. That is the instruction. Exam, we follow instruction. We don't assume. We follow instruction. But the date helps us to be able to give the correct journals. All right. So that was the first one for 7.5 mark. Then your B. Remember what I said, you read everything first before you even read the scenario, everything. Then you will reread again the one you're about to read to start answering. So the first one is journals. It has to do with IS 38, intangible assets. We are focusing on the cost incurred in relation to the patent, and it's for the year ended 31st March 2023. Okay, so we understand what to look for. Once I get to my question, I understand exactly what to look for. Then B, here is a discussion. I was saying this in the beginning. If you just joined, get used to answering discussions, because discussions are definitely going to be there in the exam. Like, it's not a question. Are we even going to ask, guys, are we going to have this? No, it's not a question. It's definitely there. You have to get used to how to answer discussions. And how do you do that, guys? You have a question bank which has solutions. Right, and the people that have actually done the solutions to those question banks are the examiners of the paper, of the exam. So these people are telling you this is the standard that we want. When you're answering your discussion question, this is what we're expecting of you. Usually a discussion question, you start with the theory. Theory that is related to what is being asked. Not just every theory. Don't just do as a dump. Just because I asked you about property, plant, and equipment doesn't mean you have to tell me everything about property, plant, and equipment. Maybe my discussion is based on the cost. Which cost should be included? All right? That's all I want. So on property, plant, and equipment, I'm only saying focus on cost. So when you're giving the principal should be related to the cost only. So don't do a dump, guys. Don't just take your whole textbook and dump it onto the exam. You're not going to get any mark. All right. So that is it. You first give us the theory or the principal in relation to what is being asked. All right. That's the first thing you do. Then the second thing is now you are going to apply that theory to the scenario that is being given. So the company, I want you to mention the company, mention the amounts that are there, mention the names of the using, mention the asset that is being there. Talk about it, like bring the scenario into the theory that you just gave us. That is where the marks are. The theory will not even have marks. It will just be there to introduce the discussion that you're about to give right now, which is the application of the scenario to the principle or the theory. Okay, so that is basically how you do it, and then you're gonna conclude. So it's three parts. It's give us the principle or the theory in relation to what is being asked. Number two is discuss this theory, in other words, apply it to the scenario. And number three, it is the conclusion. All right, it is the conclusion, guys. Remember, you're supposed to have a notebook where you're writing notes and writing tips. This one is a tip now I'm giving. Please write it down. All right, so I repeat. Number one, principle or the theory in relation to what is being asked. Remember, I warned you guys against just doing a dump. Don't just dump everything. In relation. So if it is the cost they're talking about, then give us the theory on cost. Don't include depreciation and other things because they didn't ask it. Okay, unless if they asked it. So focus theory on what is being asked. Number one. Number two, discuss the scenario to the theory. In other words, application. So you're applying the scenario to the theory. Use the company names, use the company assets, use everything that is being given on the scenario. Call it by the name that the scenario has called it when you're referring to it. So instead of saying every entity should include directly attributable cost, you rather say Inzimpo. Let's say Inzimpo was the name of the company. You rather say Inzimpo should include directly attributable asset, which are commission, legal fees, and whatnot, which is in the scenario. You understand? That's how you get your marks. So don't talk in general, talk the scenario. Okay. Also remember, guys, this is a discussion, so they want it in words. Avoid giving us things in numbers. Okay, thinking that everybody should understand this. The marker is an accountant. These people, they know accounting, so they should understand this. It's very wrong if you're thinking like that, ne? If you're thinking like that, guys, if you're thinking like that, it's very wrong. So when they say discussion, they want it in words, in full sentence. Like this is where English really comes in, a proper sentence, in words. Okay, so don't just do a calculation and expect the marker to know. When they're coming to mark, they just mark. They will understand. These people, they're accountant, they know these things. No, not like that. When you're discussing, think of it more like you're discussing to somebody who is not an accountant, and they must understand what you're doing. So it must be in sentence. Explain the calculation. So don't show the calculation, explain the calculation in full words, in full sentence. That's how you get your marks. Now, once you are done with your discussion, so most of the work is going to be seated on the discussion. The application of the scenario to the application of the scenario to the scenario, that is where you are getting most of your marks. So that should be like 80% of the work that you're putting in. Then once you're done with that, then you conclude. You conclude in relation to what is being asked. You now give them a conclusion to say, so and so is the answer. Finally, after I have discussed, this is the conclusion. Please remember to conclude. Most of the time, students do not conclude. You discuss and just leave it hanging. What is it that you really wanted from the beginning? Okay, guys, you guys are not liking the video. Please like the video. Like the video. If you are here, guys, like the video. Like the video. All right. Please also share. I hope you are sharing with somebody. I hope you are sharing with somebody. Please share the links around. Let's get more people here. Let's get more people here. Let's get more people here. Like the video, share the video. Yes, guys. Yes. Let's like. Okay, let's continue. So then we continue. So it says, discuss how the revenue recognition, that's what they want, and measurement principle stipulated in FAC 15. So that's where it talks about revenue. Guys, I have covered revenue. Guys. I have a video on revenue. If you go check on the channel, check the videos on there. I have covered revenue. I have a video where I did principles on revenue. in detail, and I have a video where I did questions on revenue. Please go and have a look at it. If you are still struggling, if you still feel like revenue, you have not really gotten it, you have not really understood it, please go and check that video out. Okay, so IFRS 15 revenue from contract with customers will affect the revenue amount. How it will affect the revenue amount accounted for on the streaming service contracts. So that is it. Whatever we are doing, we are focusing on the streaming service contract, and we are focusing on the revenue recognition and measurement. Okay, right. Then for the financial year ended 31st March 2023, just like the other one. Okay, then it says, please note, calculations are required. So you are allowed to bring in calculation. No marks will be awarded for calculation if the calculations are not supported by relevant discussion. In other words, you are allowed to do the calculation provided is being supported by the relevant discussion. Okay, provided. All right. So let us continue. Right, once you have that, then they say logical argument 1 mark. Usually they'll give like 3 marks there and there, just to just to boost you. They really do give a lot of 3 marks. So every time they ask a question, they'll probably be like a 1 mark that will just be there because you have answered the question, maybe according to the format, the right format and things like that. You get like a 1 mark and 1 mark. They're probably about maybe 5 or 6 marks that will just be given for free. Okay, so those are some of the things that actually boost students at the end of the day. So number 2, we're discussing in terms of revenue. Okay, I would have celebrated if I was writing this exam, because guys, revenue is not complicated. Once you understand your 5 steps, you are actually good to go. All right, revenue is not complicated, so I would have celebrated if this was my paper. But it depends on you. How good is your revenue? If your revenue is bad, remember, go and watch that video I did on revenue. Okay, so that's number 2. Number 3, or rather C, when you go to C now says disclose. So we have one question where we do journal, another one where we're doing a discussion, then this one is disclose notes. Disclose the following notes to the annual financial statement of Todo. That's the name of the company, Todo Limited, for the financial year ended 31st March 2023. We are doing notes on intangible asset and deferred tax. Now remember, we touched on intangible asset here as well. Remember, in A. All right, we touched on intangible asset in A, and we are touching it on C as well. This is why I always say read the question in full. Read the full question before you start answering, because once I'm doing A, I'm already keeping in mind what should be done in C. Okay, and then which notes they gave us, exactly the notes they want us to do, the intangible asset and the deferred tax. They said excluding. This is very important. This is where we waste time. They do not want any calculation on patents. So because they don't want any calculation on patents, don't give us any deferred tax calculation on patents. Otherwise, you will just waste your own time. Okay, you'll just waste your own time if they have not, please. Okay. Okay, it's blurry from guys, maybe it could be network. It could be network. If it's blurry on your side, it could be your network. I'm not so sure, guys. Please confirm. Others that are watching, please let me know if it is blurry on your side as well. Please let me know. It could be due to network. On my side, everything is looking very clear. So I'm not so sure, but yeah, others, let me know from your side. Is it also blurry, or are you able to see what is on the screen? Okay, I was just answering this question because I felt it was necessary to. All right, so I'll continue. So that was C. We're disclosing notes. We're disclosing intangible asset notes and deferred tax notes. Okay, and that was 15 marks. Now I want you guys to check the allocation, mark allocation on the discussion side of things. So it means if you are able to conquer discussion, you're actually going to pass the paper, because one thing I've noticed, the discussion questions are usually having the highest mark. So once you conquer your discussion, you're ready to go. Guys, the advantage now on the online side of things, on the online side of exam now, the advantage is this part now. It is the what you call the fact that you can actually have your notes with you. I know they may consider that as cheating and all that, but you're in your house. All right, you are actually in your house, and you can have your summary notes. So once I see them talking about what is it, revenue recognition, hey, I'm gonna take out my revenue notes and let it sit there. All right, I'll let it sit there, and then I'll be, referencing. I know my stuff, but just to do reference to be faster. All right, I'm not actually encouraging cheating, but I'm just saying that with the advantage of an online exam, it will be that I can actually have my notes with me. Okay. All right, so let us continue. So the other information that they want, please note to include any impairment loss disclosure within your intangible asset notes. Okay, so if you have impairment, no, don't forget, this is very important. If you leave this out, you're gonna lose marks. So if there was an impairment, please remember to include your impairment impairment notes or disclosure underneath your intangible asset notes. That's what they're saying. That might be applicable. Indicate in your deferred tax notes whether the deferred tax balance per item is a deferred tax asset or a deferred tax liability. Remember to apply those rules, those 4 rules. And then your deferred tax note does not have to include any qualitative disclosure. So you don't have to give us any qualitative disclosure on the deferred tax note. Just give us the figures. All right. So for example, I'm just giving an example. If I have building, just say building deferred tax value is maybe 40,000 deferred tax asset or liability. That's what they want. Okay, so that is basically it, guys. We have now read the question in full. Do that, please do that in the exam. Don't rush into answering one question because they may work together. All right, the question A may actually help you also in question B or in question C. So you need to understand these things. And also when I'm reading the scenario, I should be able to already have in mind what they are looking for so that I can just jump into the question. I can just jump in the scenario already knowing that I'm looking for 1 2 3 1 2 3, and when I start answering, I'll be faster that way. That's where we get our speed. That's the exam techniques I was talking about. We get our speed when we are actually when we have an idea of what they're looking for and we are reading in the scenario already, knowing what to focus on. Okay, and then overall it says please note your answer must comply with the requirements of International Financial Reporting Standard. Guys, why do they always say this? In other words, the principle that has been taught, that they taught you throughout the year, is what they expect you to answer with. That's what they mean. Okay, they expect you to answer with the principle that is being taught throughout the year. All right. Indicate in your deferred tax. Sorry, wait. I went up. I'm supposed to go down. Accounting policy notes are not required. Always, guys. They can never examine you an accounting policy because it's too long, and every company's got its own accounting policy. Okay. They only examine you when there's a change in accounting policy. All right. The comparative information is not required. In this question, yes, I can also see that it's not required. So it means don't show other years, only focus on the year in which is being asked. All right, do not compare. We're not showing like last year and this year or anything like that. I don't want that. Then it says all calculations must be shown. Always, guys, always. But remember, in a discussion, rather discuss the calculation than just showing it. Rather explain what you are doing. So it's even funny to say like I'm taking maybe sales of 500,000 and multiplying it to the cost price of 150. It's better to explain it like that than to show the calculation itself. Okay, please remember that. Right, then it says calculations are to be done to the nearest rand. In other words, we don't want to see decimal places while we are busy with the question. We don't want to see decimal places. So now that I know what's what, I am now going to go to my question. I understand everything that they want me. I'm going to do a journal, a correcting journal on which has to do with intangible assets, on the patent. B, I'm doing discussion on revenue recognition. C, I'm doing notes. I'm disclosing 2 notes, which is my intangible assets and my deferred tax. But in the deferred tax calculation, I must exclude patents. Okay, so I know what's what. Then we can continue into our answering. Now that I know what's what. So another thing is also to just put a layout, especially when it comes to groups. Put your layout, and before you can start already answering, it helps. Okay, here the questions are a little bit independent, so I don't really need to put a layout of everything. I can just put a layout of what I want. Also have your timeline, guys. Have your timeline with you, just so you don't forget what you're dealing with. So we know that my year ends on the 31st of March 2023. That's my year end. My year will start on 1 April 2022. Whatever I do, I need to keep my mind here. My mind must be here. Anything before or after should not be included in my calculation at all. Like at all. Okay, please remember that. Right, so let's continue. We are now doing a journal, so I'm just gonna put in my journal formats. Okay, my lines are not that straight. I could have used a ruler, but it will just take us time. As long as it's clear enough. So this will be my debits and this will be my credits. All right, once I have that, I'm now going to my scenario. Let's go check out what is really happening. What are they even saying? What's even in here? Okay, first thing first, understand the nature of the business that they're doing. What is the business that they're doing? And our financial period, we already know it, right? What business are they doing? What is in the business? And then let's get straight to what we are working on. Okay, right, so it says here Todo Limited, and then in short Todo. I don't know if I say Todo or Todo or whatever. I'll just say Todo. Todo Limited is a listed South African media broadcasting company. Very important. So here we are dealing with the media broadcasting company like SABC, like ETV. All right, that is what you should have in mind. Which offers live TV broadcasting and streaming services. Todo introduced the streaming services as a new service within the 2023 financial year. Streaming services allow customers to watch television shows on demand. Due to new entrants entering the market as well as current service providers like the Netflix, the broadcasting industry is highly competitive in South Africa. Todo has a 31st year end. You are a newly qualified accountant and have recently joined Todo. For the financial year ended 31st March 2023, the following matters came to your attention that needs to be resolved before the financial statements can be signed off. All right, so we have here the first one is the patents. Okay, so we understand what we are dealing with. So we understand that we are dealing with something like your SABC, like your ETV. Okay, that is what we are dealing with basically. And now we are dealing on the patents, which is the TV antenna amplifier. All right, so let's get going because this is where we need to do our journal that we're talking about. So what is the story in here? So it says Todo embarked on a research and development project. Now guys, the moment I see research and development program, I need to understand that I'm going to have two phases. There's going to be the research phase and I'm going to have the development phase. I understand that my research phase is just going to be expensed. Any expenditure that was incurred within the research phase or period is going to be expensed, and any expenditure incurred within the development stage is going to be capitalized. That becomes the cost of that particular assets. Okay, that becomes the cost of that particular asset that we are dealing with. So let's continue. Todo embarked on a research and development project during the 2022 calendar year. Okay, guys, I've seen that there are quite a number of people that have also joined now. Please, if you have joined now, I'm working on the assessment 10 of 2023, which was the elective assessment that was done last year. I have put the link of the question on the description. All right. Otherwise, you can also get it on my UNISA assessment 10 of 2023. Okay, so the link is below. Please download the question so that you can work along with me. Make sure you have a notebook, a pen, and a calculator. And if you have any questions while I'm busy, write your question down, and every time I'm done with one question, I'll come and answer the questions. Okay, so write your questions as we go. All right, and if you are new, please make sure you are liking the video. Please like and subscribe. Okay, like the video, subscribe, and share the link. Okay, right, let's continue. Total impact on the research and development project during the 2022 calendar year to develop a new TV antenna amplifier, which will amplify the broadcasting signals to better the delivery of quality pictures to customers. At the completion of the research and development project, Todo registered a patent for this development TV antenna. So they registered a patent. A patent, guys, is an intangible asset. I think I even gave this an example when I was explaining what an intangible asset is. So this is an intangible asset. An intangible asset is a non-current asset. Okay. For this development, TV antenna amplifier with the Companies and Intellectual Property Commission, the CIPC of South Africa, for a period of 20 years. So this is going to be registered for a period of 20 years, right? That becomes the useful life of that patent, 20 years. All right, guys, like the video. Okay, the patent was ready for use as intended by management, as well as brought into use on the 1st of August 2022. So in August 2022, that is when it became ready for use. All right, that is when we actually begin to calculate or account for amortization. Amortization begins on the day the asset is ready for use. But remember, it's not the same with tax. With tax, we wait for the asset to be brought into use. Please note the difference. So this one in particular, it was ready for use as well as brought into use same time. Ne? So it means even for tax purposes, I'll start calculating my tax allowance on the same time, but not always. Sometimes they may use different dates. So you just need to know ready for use, it means for accounting purposes, and brought into use for tax purposes. Okay, then it says below are the details of the cost incurred in the in-house research and development project of the TV antenna amplifier. Right, so we've got phase 1 and phase 2. And then it says, if you look at phase 1, it's sending us to note 1. It's very important. So when you see that, it means run to note 1 and understand what is happening in note 1. Okay, so it says here, phase 1 cost, note 1, incurred between the period of March, 1st March to 31st March 2022, and the cost was 150. Phase 1 again, incurred between April to... Now, let's go check the timeline. My timeline says that my year begins in April 2022. So it means my year only began here within this. That is why they separated the cost. The 150 is for the previous year. Okay, the 150 is for the previous year. All right, the 170 is for this year. Please take notes of that. Very important. A lot of students would have missed this, so you end up putting information that is not supposed to be in the current year. Very important. Right. Then going on. Now I lost my pen stuff. Okay, guys, just a minute. Okay, it's fine here. I wanted it to be the way it was. Okay, there we are. We have it back. So there we are. The phase. So we have in April and March. The March one was last year, so we do not include it this year. And then the April one is the expense that was incurred this year. So what is in note 1? Let's also understand note 1. Okay. So note 1, it says these not cost incurred in investigating the prospect of developing the TV antenna amplifier. This cost include cost incurred when performing research related tasks. Guys, this is the research phase. In short, what they're saying is what is in note 1 is under the research phase. All right, but the research phase, a portion of the research phase falls in the last year or the previous financial period and a portion falls within the current financial period. All right, that is why it's separated there. Okay, so this is the research phase because this is the cost incurred while investigating. So here no work was being done, but they were just investigating the prospect of developing this TV antenna, right? Okay, and also they say this cost includes costs incurred when performing research related tasks. So this is the research phase. Okay, that's what happened there. Then phase 2. So we come back to our phase 2 here, which is on note 2. This incurred between the period of 1 May to 31st July. Remember, the asset was ready for use in August, beginning of August. So from May all the way to the 31st July, this is note 2. So let's go check out note 2. Note 2, it says, these are the costs incurred in the application of the research findings to develop the TV antenna. So here we are now applying. So this is where the work is being done. In other words, this is now the development phase. Okay, so we're going to put it here from our note 2 or phase 2. This is our development phase. So development phase, remember, is what makes up the cost of the intangible asset, because this is the cost that is going to be capitalized. All right, then we continue. So it says, note 3, a broadcasting aspect was contracted by Todo. Let's start here first. So here we have the price 1.4. Then expected value of the 20-year-old patent. Then we go to note 3. Okay, so expected value, this is more or less like your residual value. It's more or less like that, but anyways, let's read further to understand. So a broadcasting aspect was contacted by Todo on the 1st August 2022 to estimate the value of the antenna amplifier patent and the end of the 20-year patented term. There is currently no open market for this type of patent, nor is there a buyer committed to purchasing the patent in 20 years time. All right, so because there is no open market or any buyer committed, that means we cannot really rely on this value. This value should not be relied upon. All right, we cannot rely on it. There is no market, open market for it. There is no buyer committed to it. So the estimate is not reliable. We can't just work on an estimate that cannot be supported. It is not a reliable estimate. We cannot work on it. Okay, right. Then we continue. So it says the previous accountant of Todo accounted for the cost incurred during the research and development project of the TV antenna amplifier within the 2022 financial year as follows. Okay, now this is the work that was already done. Remember, we are doing correcting journal, and I want you to do this. I want you to pay attention. When a small information like this is missed, you get the question wrong. So you would think like, kill the paper, I killed the paper. Only when you get your result to see that, oh my God, failed. These are some of the mistakes. Ne? So these people already accounted. There are journals that we already done. We are just correcting it to make it correct. So let's see what was done. In 2022, this is what they did. So that is the 150 that we had there, okay, for March. So it debited research cost. This is correct. It debited research cost. This is correct. And it credited bank. This is also very correct. This is 100% correct. All right, 100%. Okay, so it was put as an expense. Remember the research phase, we put it as an expense. And bank, because money went out, we paid for this expense, so it's okay. Bank went down. This is 100% correct. Now, and then it says subsequently within the 2023 financial year. Now it's this year that we're talking about, our current year. The previous accountant accounted for the cost incurred in relation to the entire research and development project of the TV antenna amplifier as follows, right? So what did he do? Okay, he debited the intangible asset of the patent. By simply debiting the intangible asset, it's correct, but the amount is now the question. So here we can be sure, yes, it's supposed to debit intangible asset because it's now being incurred as an asset, an uncurrent asset. It's okay, but is the amount correct? Let's go check what makes up this amount. So it says they credited bank with 1,570. Okay, 1,570. What makes it up as well? We have to question now. Then it says gain on capitalization of previously expensed research. This is totally wrong. Why are we capitalizing the previous research expense? This is the expense of last year. They are now capitalizing this. This is wrong. So this must be reversed, or rather eliminated. So we must reverse this. This is wrong. It was supposed to be an expense. So what happened here? It is done. We don't even touch it anymore. It was already recorded as an expense, and that's it. Why is it there? Now let's try to figure out what made up these amounts. Eh? So 1,570,000. What do you think made up the amount? Let's go check at the chart. So we have our development amount was supposed to have been 1.4. If I take 1,400,000, I add 170. And I don't see where they recorded that. Also, you see there's a missing. This 170 is missing in this journal. There's an omission of the 170 research cost for this year. Okay, so if I add it, it gives me 1,570,000. Okay, so I see what they did. They took the research cost and included it in the amount. Okay, but this was the bank amount. This is what we paid this year, which is correct. If it's bank, this is how much came out of the bank. It's fine. But then what they did is now this. So they took the 1,570 and then they added also plus 150,000. So there is the amount now. So what happened here? They took all these three amounts and added them together to get this figure. Is that correct? The answer is no, it's not. Remember, it is only the development phase. It's only the expenditure in the development phase that is capitalized. So the only amount that I was supposed to have for my intangible asset was supposed to be 1,400,000. Then the 170 is supposed to be expensed as a research cost, all right? And then the 150 was already expensed last year. There was no need to enter it again, so it was not correct. Okay, so here what we are fixing, basically we are reversing the 150. We are correcting the intangible asset amount. Let me just do this. We are correcting the intangible asset amount, we are reversing the 150, and we are also accounting for the research expense of 170,000, which was not done correctly. If you are just joining, please like the video. Thank you. Okay, then we go to the depreciation side of things. On the depreciation, what is there? Why are we having depreciation? That is already a question. Now, somebody who did not study well, who does not understand principle, will let that go. Guys, this is not a property, plant, and equipment. It's not a physical or it's not a tangible asset. This is an intangible asset. And in an intangible asset, we cannot talk about depreciation. Already problem. This should not have been depreciation, but rather amortization, because it's an intangible asset. Amortization. Okay, so it's not supposed to be depreciation, number one. Number two, we need to check, was this amount correct? This 66,000 that we're seeing, is that a correct amount? Question. How did they come about it? So they said here accumulated amortization. This account is correct, accumulated amortization, but is the amount correct? We question. Right, how did they do it? So this is what they did. Recognition of the amortization for the 2023 financial year. They took that wrong amount. They took that wrong intangible asset. Then they minus the 400,000, which was not a reliable estimate. We're not even supposed to use it. We are not supposed to use the 400,000. So already this should be out. All right. Then they divided by 20 years. 20 years is the 20 years was the useful life, because this patent was given for a period of 20 years. So we can use the 20 years. The 20 years is correct, but the 400,000 is not supposed to be used. Also, the 1,720,000 is an incorrect amount. All right. So you see, I took my time to understand what was done so that I can correct it. Now, if I don't know what was done, how do I correct something that was, that was done? How can I correct something that I do not know this is wrong? Now, one mistake a student will make is they will do the journals correctly, but just that the problem is these journals were already done before. So if I go there and redo the correct journal, it will not be correct anymore, because I'll be doing some things twice. I hope you are learning. I'll be doing some things twice. It's no longer going to be correct. For it to be correct, I have to just fix the things that were done wrong, but take them to become right. So let's do this journal now that we know what's what. We are doing the 2023. 2022 it was perfectly done. 2023 is the issue. 2023 is the issue. So why am I going to start? First of all, I'm fixing these things. So what am I going to do? I'm going to debit this. I don't know what account this is. Gain on capitalization, blah, 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 blah. We are doing a reverse on this. So I'm going to debit it to cancel it out. And then the bank is fine. So the bank is out of the equation. Bank is completely fine. There's no problem with bank. That is how much they did pay. It is correct. So I'm reversing that. I'm also going to account for the research cost of this year, the 170. I'm going to account for it and also fix the intangible amount. That's the first journal. The second journal, I'm going to have to recalculate the depreciation and then reverse the difference. Okay. So let's start. First thing first, that gain on capitalization amount. Let's start. So gain on capitalization of previous research cost. Okay, so it was a profit and loss account. Always indicates it was a profit and loss account. So that was 150, which they credited. We are just going to reverse it by debiting it so that it cancels out and leave us alone. All right, the next thing, I'm going to account for the research cost of this year. So I'll come here and put research cost. This is also a profit and loss account of the current year. It's supposed to be debited 170,000. All right, then like we said, the bank was fine, and then now we need to fix the portion of the intangible assets. So my intangible assets amount was overstated. It was overstated by these two figures. Actually, the two amounts are not supposed to be there. The 1,400,000 is okay, so it was already accounted for. I'm only going to fix the difference. The 1,400,000 is fine, but the difference, those additional research costs are what was not fine. So then I'm going to credit that portion so that it decreases that overstated amount. So we're going to have our intangible, or we can even call it patents. Let me rather call it patents. The actual asset is patents, because that's what you do. You're not going to say property, plant, and equipment. You're actually going to say either equipment, building, land, whatever. So you call it the actual name that it is. It's the patents statement of financial position accounts. All right. So there are two calculations to it. Is either I remove these two figures. I can either remove these two figures from it. So I could say 150. Let me do my calculation in red just so that we focus on it. I could say 150,000 plus 170,000, or I could say the amount that it was, 1,700,000 and something. It was 1,720,000. I could say 1,720,000 minus 1,400,000, which is the correct figure. So this was what was supposed to be. This was overstated. Well, whether I add this or a minus like that, it's going to give me the same answer. Okay, and therefore the difference is going to be, so you take 150 plus that, or you take 1,720 minus 1,400,000, and you're going to get 320. So 320 would be what I will then credit my patents with. All right. So let me know in the comment section if you understood what I said, what I did right now. Let me know in the comment section if you want me to repeat it, but I will talk to you guys once I'm done with the question in full. Okay, so you can write on the comment section. Was it okay? Did you understand what I did? How was it for you first? Like before I could do this, did you before I could do this, were you able to figure this out on your own? If you were sitting in an exam and this was your question, were you able to figure this out on your own? All right, so it's something you should consider. And why were you not able to figure it out on your own? What did you think you did not know that you just know now? Okay, so let's talk on the comment section. Anyways, let me finish so you can put your questions if you have any questions there. And if you want me to repeat it as well, put it on the comment section, and I will answer you guys once I'm done with this question. Right, the next part is now the depreciation. Depreciation. Why do we even have depreciation? So, number one, we are reversing the whole depreciation because it's not supposed to be there. So the whole depreciation amount must be reversed. It was debited, so I'm going to credit it. Then I'm going to debit the correct amortization figure, which means I'm not going to minus that 400,000, which is not a reliable estimate. Also, I'm not going to use that figure, the 1,720,000. It is an incorrect figure. I'm not going to use it, but we can use the useful life because that's how much we bought the patent for. That's the period that the patent was bought for, so we can use that one. Okay, now let's continue. Let's get doing, and then the difference will be done on the accumulated amortization. So the accumulated amortization is either overstated or understated depending on what we're doing. Okay, it's going to be either overstated or understated depending on the calculation of the real amortization. So let's go. First thing first, let's remove that depreciation, 66,000. There is no depreciation. It's not a PPE item, so let's remove the depreciation figure. Right, the real item is supposed to be the amortization. Amortization is what was supposed to be recorded and not depreciation. Right, the depreciation, I'm reversing it by crediting it. So debit and credit opposite of each other, né? Right, so I'm crediting it. All right, I'm seeming to have a network issue. I'm not so sure on your side if you guys are getting me on your side. All right, please just be communicating. Yeah, please just communicate with me if the network is still fine. I think I'm getting a warning here on my network, but let me know if you can still hear me, né? Let me know please on the comment section. Let me know if you can still hear me. Okay, so we continue. The depreciation is being reversed with the same amount that it was before, the 66,000, and then we are now going to calculate the real amortization. So the amortization figure was supposed to have been, we take the 1,400,000, which was the development cost, and we are not using that estimate of the residual value. So this is going to be over 20 years, but for how long? Very important. So remember what they say, the asset was only ready for use on the 1st of August. So somewhere in here, 1 August 2022, August 2022. Okay, just want to double check that. August 2022, exactly there. In August 2022, we had the asset was ready for use, so we're only going to start our depreciation calculation from there. So day to end of the year. So it is August, September, October, November, December, January, February, March. So it's 8 months. Okay, I repeat. August, September, October, November, December, January, February, March. 8 months. So for 8 months, we're going to calculate our amortization. So we come there, multiply by 8, divide by 12. So 1,400,000 divide by 20, multiply by 8, divide by 12, and the actual amortization we are supposed to have accounted for was supposed to be 46,667. I'm rounding off. Remember, they don't want decimals. Please remember to round off. They do not want any decimals. All right. So that is that, and then that is your depreciation. but now it doesn't balance. Your debit must equal your credit. So the difference of these is going to go to the accumulated depreciation, and the accumulated depreciation, you can see, is going to be here on the side to balance. So it's now a balancing situation. So not depreciation, amortization, sorry, accumulated amortization. Let me write it on a different color. Accumulated amortization. This is where the difference is going to be accounted for. Remember, they have already accounted for 66, so it has to go down. Right, so it's going to be 66,000 minus 46,667. Okay, so this is going to be on the debit side. Remember, debit must equal credit. Okay, so that will be our difference. That will be our difference, and that is it. You're not required to do any narration. You're not required to put anything down. Guys, let me know if you can still hear me. Let me know if I'm still on. My network seems bad on my side. Okay, network seems bad on my side. Let me know if you can still hear me. Okay, right. So this question is done. I'm now going to answer any question that we may have. I'm now going to answer questions that we may have. So if you have not put on your question, you can put on your questions. I'm not going to answer questions. Okay, put on your questions. Put on your questions. Any question on here? Okay, let's start. So I think we have our first one in here. So let me go back and put on my let's go back and put on our video on. Okay, guys, so let's answer. What do we have? Okay, so the first one, okay, I think we have only like one question, and the other says they're clear. All right, that's good. All right, so we have a residual value of 400,000. Why are we not accounting for it? Okay, why are we not accounting for it? I think I've already explained that. The reason why we are not using that, I think, let me rather go to the question so we can read it together. Okay, I think I'm gonna close this and open this. Okay, so let's rather go to the question so that we can read it together. I will show you why are we not accounting for that 400,000. So it's on note 3. So note 3 says a broadcasting aspect was contacted by Todo on the 1st of August 2022 to estimate the value of the TV antenna amplifier patent and the end of the 20-year patented term. It says there is currently no open market for this type of patent, nor is there a buyer committed to purchasing the patent in 20 years time. Now we cannot rely on this estimate. So it's a wrong estimate that is being given. That 400,000 is a wrong estimate, and we cannot rely on it because it does not have an open market for it, and also does not have a committed buyer. So what would make us now put in an estimate like that? It will be very, very wrong for us to consider such an estimate that is not reliable. That is why it's not included in the that is why we're not using the 400,000. I hope it helps. Okay. So that is why we're not using it. I'm sure a lot of students learn to use it. Please remember, if you have a similar question like that in the exam, tomorrow, why am I saying tomorrow? You guys are not writing tomorrow. But if you do have something similar like that, please remember the estimate has to be reliable for us to use that estimate. Okay. It couldn't just be an estimate. Somebody can just decide, we can just wake up and say 1 million. From what? Based on what? What is causing that 1 million? Okay. Please take note of that. Ne? Right. Okay. Another question. Please clarify note 2. the 140K, why are we not capitalizing it? Wow, very important. Thank you so much for bringing that up. Thank you so much for bringing that up. Why are we not capitalizing the 170? It goes back here. Okay, note. Okay, it's not note 2. Now remember, the 170 is still sitting on note 1. And note 1 says, cost incurred in investigating the prospect of developing the TV antenna amplifier. These costs include costs incurred when performing research-related tasks. All right, so the 170 is falling within the research-related task. And remember, any cost incurred within the research period, those costs are not capitalized, they are expensed. Okay, so the 150 and the 170 are both expensed because they are falling within the research related task or the period. Okay, I hope you are answered. Please let me know if you are answered. Let me know if the answers are clear as well, or if you need me to explain further, let me know. Okay, so it's not in note 2 actually. The 170 is still sitting in note 1. The only reason why they separated 150 and 170 is that the 150 falls within the previous financial period and the 170 is falling within the current financial period. They just wanted to separate the periods, but both of them are falling within note 1. They are research related costs. Okay, hope you answered. Do we have one more? I can take one more question so I can continue. Do we have one more question? Okay, if you are answered, if you are clear, also just let me know. Let me know, even with an emoji or something. Let me know that you are answered. Okay, right. I can take one more. Okay, right. If you do happen to have a question later, just put it there. When I'm done with the next question, I'll come and answer. Okay, right. All right, perfect. Thank you guys. I see. All right, let me continue now. I'm gonna put on my video off so that we can continue. If you have just joined the class, guys, please like like the video and please share it. Share it. There are a lot of people that want to benefit from this, guys. We're giving you a revision for free, something you could have paid like 400 to 600 rand to attend, and you've been given for free. Please also give the opportunity to others to join that are not maybe away or something. Please share the links to the group where you are coming from. Share the links. Okay, let's get going. Let's get to work. We're going to question the second question now, so let's continue. All right, I'm putting my video off so that we can focus. It means real business right now. It's a real business situation, so let us focus. All right, so we are back here. We are now doing the second one. So the TV antenna and stuff were already cleared. Now it's a discussion. Remember, we're doing a discussion now on revenue. Okay, so now it's a discussion on revenue, and I always advise that you go back to read the question again. All right, go back and reread the required, because we read the required all together so that we have an overall idea of what we're doing. But it's always good to go and reread the question again, just so you can have a proper idea that you are actually answering the question, because sometimes you may be answering your assumption and not the question, right? To have a proper, like, to be 100% sure you are answering the question. Okay, so we're going back to the required and we are focusing on B. It says discuss how the revenue recognition and the measurement principle stipulated in AFRES 15 revenue from contract with customers will affect the revenue amount accounted for in the streaming services contract for the financial year ended 31st March 2023. Please note, calculations are required, but no marks will be awarded for calculations if the calculations are not supported by relevant discussion. So yes, they are saying yes, it is allowed, but provided it's being supported with discussion. All right, so that's what we're doing, guys. The main thing about this discussion is the revenue recognition and measurement. So in other words, it is the 5 steps. Okay, Again, if you're just joining in, I think I told the others, if you're just joining in, please remember, I have done a video on revenue. I've done a video on revenue recognition. There are 2 videos on that. If you have any issue with revenue, if you don't understand revenue, please do check out that video. Revenue from contract with customers, FAC 15 video. Check it there and it will probably help you. I've done it in detail. I've also done a question on it. Revenue. Okay. Anyways, let us continue. So we know what we're talking about. We know we're talking about revenue recognition. Guys, I'm going to show you a formula, what we usually use when we are doing a discussion. I'm not going to write long stories like you're supposed to write in the exam, but I'm going to give you what you need to include in your discussion. I'm going to tell you what we need to include in your discussion. Okay, so remember what we said. It's in 3 phases. The first thing is give us the principle or the theory behind revenue recognition, and then number 2 is apply the principle to the scenario. Okay, that is where you're going to spend most of your time. Spend a lot of the time applying the principle to the scenario. Spend most of your time there. Okay, guys. And finally, conclude. Please don't forget to conclude. Don't forget to conclude. All right. Now, what do you mean? Maybe you ask Nami, what do we mean conclude? Remember they say discuss how revenue recognition and measurement principle stipulated in FAC 15 will affect, how it will affect the revenue amount accounted for on the streaming services. How is this going to affect this particular amount that we're supposed to account for? Okay, and for this period, for 31st March 2023, for that period. All right, so let us continue. Let's continue. Now that we know what's what, let's go read the scenario as well. What's up in the scenario? What are they even talking about? What's on the story? Okay, and then I'm going to show you guys a formula of how you should do your discussions, how you should bring your discussion. Like I said, guys, I'm not going to write the whole discussion down like you're supposed to do, but with what I'll give you, it will give you an idea of how you should break it down in English. So it's English that is going to be your issue only. But the most important thing, remember, you're not just writing a long paragraph. You're writing a paragraph that makes sense and that is in line with what is being asked. So don't just write a lot of things. And please, I've said it in the beginning, when I say it again, don't do for us a theory dump. Just because they mention revenue, don't take everything you know or you saw on your study guides about revenue and just dump it here. No, guys, we are talking about recognition and measurement of revenue, and we're not talking about every contract. For example, if there's no consignment, don't talk about it because there's no consignment. If we don't have a bill and hold arrangement, don't talk about it because it's not here. So don't just tell us everything about revenue. Tell us what is required and is relevant in this scenario as well. Please don't just do a dump. So let's read. So it says streaming services. Let me just see that we are not leaving out something. Just see we're not leaving. Okay, so yeah, we are perfectly on the right page. Very important as well. Right, let's read. Streaming services. The streaming service was first advertised by To-Do in December 2022, while streaming services were launched nationally on the first. So it was launched on the 1st February 2023. Our year ends in March. Okay, our year ends in March 23. Okay. So once I see dates in accounting, I underline because dates are serious. It's a serious business. Dates are a serious business. Okay. So we don't play with dates in accounting. So once I see a date, I underline immediately. Right. To obtain access to do streaming services, a customer signs a 12-month contract, which meets the definition of identified contract as per FAC 15 revenue from contract with customers. All right. So they're already telling us step 1. Remember step 1. Identify the contract. Okay, step 1 is already being told there, which meets the definition of identified contract as per FAC 15. Okay, a customer is liable to pay a monthly is liable to pay a monthly streaming subscription fee of 900 in advance. Very important. If you miss this one, it can also be an issue. Ne? This is paid in advance on the first day of each month. So if I'm paying for February, so I have to pay on the 1st of February, okay? And then I'll pay on the 1st of March for March. So it has to be paid in advance first, and then I use it. All right, on the first day of each month to gain access to the streaming services of To-Do for that particular month. After signing above mentioned contract, guys, I'm sure you can relate. Now, these are the things we do all the time. We have a lot of contracts, and sometimes they force us into these things, and which really annoys me. I don't know why I'm forced to be paying monthly. No, let me decide. Especially those payments where you just think like I'm paying now, and the next month they cut your money, but you don't have any debit order contract. Like, hello. You and I, we didn't discuss this. Like, we didn't discuss this. Like, how can you just come cut my money just because I paid for something last year or last month? So yeah, most of these companies, that's what they do now, like your Zoom and stuff and all of this. Once you just make your payment this month, every month they'll be cutting without asking. They don't ask you. Maybe you didn't even plan it. They don't ask you, they just be cutting your money. Okay, so I just wanted to just take us a little bit out, just, you know, to bring you to reality. So these are the things you know, right? Now, it says, after signing the above mentioned contract, a customer should immediately purchase. So you sign the contract, then you are forced to immediately purchase a decoder from To-Do at a once-off fee of 1,400. You are forced to do that. You purchase that decoder and then you'll be paying 900 every month. Why is this expensive anyways? Okay, let's continue. This decoder is highly specialized and is the only device that can decrypt the video streams into watchable content for the customer. You see, they just answered my question. Why is it expensive? It is highly specialized and is the only device that can decrypt the video stream into watchable content for the customer. In addition, it is only capable of decrypting the video stream of To-Do and not of any competitor. Okay, only of themselves. The decoder becomes the property, very important. Here we're talking about control now. The decoder becomes the property of the customer once installed. Okay, so once we install, the customer gets control of the product, and that is where performance obligation is satisfied. Remember, revenue comes back to one thing. Before you can recognize revenue, performance obligation must be satisfied. In other words, the customer must actually get control of the product, ability to use the product, have the products, have control. That is it. So it comes back to one thing. Although we have all these steps and all these long stories, but it comes back to one thing. All right. So let's continue. Then it says, let me just read that again. The decoder becomes the property of the customer once installed. To install the decoder at the customer's premises, To-Do puts its customers in touch with third-party technicians who perform the installation for a once-off fee of 1,000. Please take note that this is not To-Do, it is a third party. It is not us anymore. It's not a company. Ne? We are just connecting you to somebody else. That's not us. Guys, this is super expensive. Like, yo, imagine you pay 1.4 and then you pay 1,000. That's 2.4 and then you pay 900. Oh my god. Wow. Anyways, let's continue. The technicians are not part of the To-Do, and accounts are settled directly with the technicians. Okay, I think they enforced that. What I was trying to underline, what I was trying to get your attention was enforced again. The decoder has a negligible resale value for the customer. To-Do manufacturers this decoder at a cost of, this is their cost price. They manufacture this at the cost of 1,200 each. Yeah? Now remember, guys, there's what you call matching principle. Matching principle. This was covered in first year and also in high school. Those of you that did accounting in high school, you know what I'm talking about. And it was also covered in first year. Matching principle, basically, you have to match the cost of sales. Every time you make a revenue, every time you make a sale, you have to match the sale against the cost of sales, okay, or rather match the cost of sales against the sales all the time. So when I'm accounting for sales, I must also account for cost of sales, né? That is the matching principle, right? Unless if you are told to ignore it, if you are told that it was already accounted for or anything like that, especially if you are doing journals on revenue. Guys, one thing I've noticed that revenue is highly examinable. It's a highly examinable topic. Revenue, intangible assets, impairment of assets are highly examinable topics. Of course, groups. Groups is gonna be there. And once you have done groups, groups has definitely been there. Okay. So if you are sitting in here and you don't understand revenue, please go and watch that video I did. Anyways, let's continue. To do manufactures these decoders at a cost of 1,200 each. Here with information pertaining to the number of new customer contracts. So this is the contract we are talking about, the new customer contract signed by To Do applicable to the streaming services during the 2023 financial year. All right. So we have here January 200. These are the new customers. So this is the number of customers. Ne? Please don't mistake. These are the number of customers. January 200, February 280, March 310, 790. To Do activates the streaming services on the first day of the month following. Very important. So this will be activated on the first month or the first day of the month following the signing of the 12-month contract. So if I sign it in January, it will be activated in February. If I sign it in February, it will be activated in March. Okay, so it's like that. So that means this March will also be activated in April. All right. So this is us understanding what is in front of us. Very important. If you don't do this in the exam, that is why you miss it. Okay, so make sure you understand what is it that you're even about to discuss. All right, and then it says To Do does not sell either. Very important. Let me use a yellow. To Do does not sell either the decoder or the streaming service separately. So they're not sold separately. Remember, if an item is sold separately or a service is provided separately, we can say the product or the service is distinct. All right, so we'll say they are distinct if they are done separately. But in this situation, you can see they're not as done separately. They are actually done sold together. So they have to be together for them to be distinct. So remember the word distinct, né? All right. Then it says here, the CFO was concerned that you may never know when a customer will watch a program. As such, measuring satisfaction of performance obligation is not possible. That's not true. So it means that this CEO has no understanding. CFO, oh my god, how did this person make it to this position? Anyways, this CFO does not understand what we mean by measuring performance obligation. Okay, I'm gonna read it again for you to see it with me. It says the CFO was concerned that you may never know when a customer will watch a program. As such, measuring satisfaction of performance obligation is not possible. The CFO does instruct the accountant to recognize all revenue on a cash basis. So guys, this CFO is completely wrong. Remember, performance obligation is not measured. We're not gonna, of course, we won't know when they're watching the program, but it's not gonna be measured based on if they're watching the program or not. This is measured once they get control of the program or the item. Like here they say the decoder. The decoder becomes the property of the customer once installed. So that's when we start recognizing our revenue, because we are saying that the customer has received the right to use the decoder because it has been installed. All right, so that is for us. That is what we are going to use. We are going to say, okay, we are sticking around with this to say that the customer has got control of the product and therefore performance obligation has been satisfied, and that's it. So it doesn't have to be this. The CFO is completely wrong, and we understand the principle, and the CFO does not understand the principle. But the question is, do you know the principle? All right, do you know the principle? Okay, so it's very important. Now that we have all this that we have here, we now have to answer the question. Remember, I said I'm going to show you a formula of how you do this. All right, remember, guys, this is not you discussing, but this is me explaining to you how you should discuss, né? you should always have your base. Like, where is your base? Where you your main base is your revenue recognition, which will be your 5 steps. Yeah? So that is your base. That is where your formula is gonna sit on. So your FAC 15 revenue recognition. I'm gonna try to write neat. Sometimes I'm trying to write fast, so it may not be as neat as you expect. But anyways, revenue recognition. So this will be my base now. Every discussion should have a base, okay, that we are sitting on. In my base here, I'm gonna have 5 steps that I work with in my base. 5 steps. All right. Step 1. Identify the contract. Identify the contract. That will be my step 1. Step 2 now will be identify the performance obligation in the contract. So identify the performance obligation. All right, that's my step 2. Then my step 3, which is very important, determine the transaction price. The transaction price. Guys, I repeat, contract like your consignment was not talked about, so don't talk about it. Contract like bill and hold was not talked about, don't talk about it. Sell with the rights of return is not here, so don't talk about it. Don't just talk anything that is not concerning this scenario. Please don't mention it. Just because it's revenue, it's not touching every aspect. It's touching only the recognition part, which is really following the steps that we know. Okay, so determine the transaction price. Step number 4. After determining the transaction price, now allocate the transaction price to performance obligation. Allocate transaction price to performance obligation. Okay, I don't know about you, but so far the paper still feels very easy. Like, I don't know about you. It also depends on how well you understand the particular topic, but I have still, so far, I have not touched on any complicated question. Remember what I was saying in the beginning when I was telling you guys, the paper is usually put into 3. There is the easy question, there is the normal one. If you have studied, you should be able to you should be able to do it, and then there's gonna be the tricky one. So every paper is gonna have those 3: easy question, the normal question, and the tricky question. But for somebody who did not study, even the normal question will be tricky for them, ne? Remember. So let's continue. Right, then after that, step 5 is where the conclusion actually comes now. This is when we actually now recognize revenue as and when performance obligation is satisfied. Okay, so recognize revenue as and when performance, that's what I was saying, everything comes back here, performance obligation is satisfied. Right, guys, this is my base. Whatever I'm gonna do right now, I'm gonna base it on this. Okay, whatever I'm doing, I'm basing it on it. Guys, if you have just joined us, please like the video, please like and share, guys, like and share. Right, okay, let's continue. This is my base. Remember, we said in a discussion there are 3 things we're looking for. Number 1, we are looking for theory, which is the principle. Number 2, we are looking for the discussion, and the discussion is the basically application of the principle to the scenario. And this is where you should be sitting here. At least 80% of the work must be done here. And lastly, we talk about the conclusion. Okay, right, conclusion with regard to the question, the required question. to tie up the required question. Guys, if you follow this, you will never do bad again with discussions. Seriously. All right. Now you must find your base. That's what I'm saying. Let me even write here base. Before you even go there, what is my base? What am I really basing this on? So it's talking about revenue, but it's talking about revenue recognition. So that becomes my base. All right. Now I sit here in my base and I must discuss everything in these 5 steps. Okay, remember, like I said, I'm not gonna write all long stories, guys. You will be able to put it together once you understand what is it that I'm doing here. Then you'll be able to understand. Okay, so it says identify the contract. What type of contract do we have? Is there any modification? Is there anything like that? Remember what they told us here. If I go to the scenario, here they already mentioned that part was already covered. Why am I looking at research? Sorry, here. It says in here, where's that? To obtain access to do streaming services, a customer customer must sign. Yes, here to obtain access to do streaming services, a customer must sign a 12-month contract, which meets the definition of identified contract as per FAC 15. So they've already mentioned here. So identify the contract a customer signs a so here customer signs a 12 months contract. Okay, so already that is done, right? So when you are discussing, if you have to discuss this part, you can talk about the fact that a customer will sign a 12-month contract, which has already been spoken of in the scenario. Okay, so you talk about this in proper word, like proper sentence. Okay, you are touching on that aspect of the contract. That's the only thing you can talk about with the contract, because they did not mention anything else apart from this. If they had mentioned anything around the contract, you would have then mentioned that also. Remember, when you are busy with your discussion, remember, let me just write NB here. NB, use names, acronyms, dates, and what else? Places as mentioned in the scenario. As mentioned in the scenario. Okay, so you could put in the name there. Every customer of To Do should sign a 12-month contract. That one is really related to the scenario. You see, when you put it like that, it makes sense. Then just say customer must sign 12 months. That is general. So make sure it is specific to say a customer, every registered customer of in To Do Limited should sign a contract of 12 months. Okay, so put a full sentence on that. So that aspect is touching the contract. And then the performance obligation. If you look at this very well, there are 2 performance obligations. All right, so the first one is that there's gonna be a decoder. Let me just go there. If you look at it very well, here it says, it talks about the contract, which that a customer is liable to pay a monthly streaming subscription. So there is a monthly service that is being done there, and there's also a decoder that must be bought. All right, after signing the above contract, the customer should immediately purchase a decoder. So they have a decoder and we've got streaming service. Okay, so let me come here. So we have a decoder, that's the product that must be purchased, and we've got streaming service. But is it enough for us to say this is a performance obligation? All right, now for us to now come back to agree that this is a performance obligation, I'm listing 2 different things. I have a product that I'm giving, and I have a service that I'm rendering. All right, but for us to be sure that this is a performance obligation on its own, the first question we are going to ask is, are they distinct? Is a decoder and a streaming service distinct product or distinct service? So I've started with my question. That is what you're asking. This is what will determine if we should count for it as individual performance obligation. Now, what does it mean to be distinct? You see, I'm explaining, guys, I'm giving you, this is a formula, né? This is a formula, and you will put it in your own words. And if you apply this formula every time you are doing a discussion, all right, if you apply it in this manner, if this is your logic, my God, I'm telling you, if this is the logic that you're using, you'll never go wrong with discussion. All right, so let's come back. So now I have identified that there's a product and there's a service, but is it distinct? Now, distinct means, can this product be sold alone? Can it be identified alone and be able to sold on its own without the other? So remember, there are some services where it can be done together and they're also done individually. How do I know if it's done individually? So the company is going to tell me that we also sell decoder separately away from streaming services. So if you just want the decoder without the streaming service, you are allowed to buy it at this price. If they tell you that in the scenario, that means it is a distinct product on its own. If they also mention that the streaming service can also be done separately without a decoder, you may have your decoder long time ago or bought it wherever, and then you just decide you just want the streaming services. If that is what they're saying as well, then we can also say that, okay, this is a distinct service because it can be done on its own. So it depends on the fact that it's either a distinct product or a distinct service. So by simply listing is not enough for us to say that it is a performance obligation. So now let's apply the scenario to this formula that we just created here. So now let's go. What does it say? What is the scenario saying pertaining the items? Are they sold alone or are they only sold together? All right. So I'm going to take it back again to the way it says a customer gets the contract. Okay, so it says a customer, I'm starting from here, a customer is liable to pay a monthly streaming subscription fee of 900 in advance on the first day of each month to gain access to the streaming services of To-Do for that particular month. After signing the above mentioned contract, a customer should immediately purchase a decoder from To-Do at a once-off fee of 1,400. This decoder is highly specialized, blah, blah, blah. I'm running away from things that are just unnecessary information. It's highly specialized, watchable, blah, blah. In addition, it is only capable of descripting. Okay, this is really additional information for me right now. I want particular information. The decoder becomes the property of, okay, when installed. To install the decoder at the customer's premises, they give it to the third party. Still not really giving me what I'm looking for. The technicians, okay, I'm running away from the technicians and all of those people and the information. I think it starts from here, what I'm looking for. To-Do activates the streaming services on the first day of the month, following the month, what. To-Do does not sell, yes. This is what I'm looking for. To-Do Limited does not sell either the decoder or the streaming services separately. That is what would then answer them. This sentence, all right, that we've put in yellow there, that is what you're going to use now to discuss here. So in your discussion, you will then include what we just read. I'm just going to do this. What we have just read. I'm trying to avoid writing so many things, otherwise you won't be able to finish the paper, né? Right. So that is what you're going to tell them now. This product, although we have identified two products, but the two products they are not distinct on their own because To-Do does not sell them individually. They are not sold individually. They are only put together. They become distinct when they are put together as a package. When once sold as a package, that is when they are distinct. So it brings us to say we do not have two performance obligation. We only come back to have one performance obligation. It is a one package. So it is just one package, one performance obligation. Okay, because they're not sold individually. If the question had said that the decoder can be sold on its own for this price and the streaming services can be done on its own for this price, if that is what it was saying, then we would have been 100% sure and confirm and say, yes, there are two performance obligation. All right, so that's the formula, guys. And then you put it in proper wording. Put it in proper wording, proper sentence that, you know, somebody else who does not even know accounting will be able to answer. Okay. Then, so that is that aspect of performance obligation. Then it says determine the transaction price. Now, the transaction price is the selling price. Ne? Please remember, it is not the cost price, it is the selling price. Transaction price is the selling price. All right, so now we need to calculate the selling price. Remember, they are going to be a package, so we have to put their price together to give me one package price. All right, of the period, because we are in 31st March 2023 of this particular period. So this is where a calculation will come in. But remember, even if you're going to show the calculation, remember to explain it. Put it in words. They want it in words. That's why they want a discussion in words. Okay. So I'm gonna bring this one here so that I can pay fully attention to it. I'm still sitting on my formula, and this is my base. As you can see, everything that I'm doing is coming back to my base. Everything that I'm doing is coming back to my base. The theory and the principle, guys, this is just basically telling them about IFRS 15 and how to recognize revenue and whatnot. So even what I have here, step 1 to step 5, that is still falling in here, and whatever I'm adding here are my discussions. Right, so determine the transaction price. Let's go back. So what are they saying? So the decoder is a once-off something. You purchase a decoder at 1,400. It's once off, okay? And then once you have purchased the decoder, then you begin to pay monthly streaming fees. All right, every month now you'll be paying a monthly streaming fees. Every month you'll be paying a monthly streaming fees, just like that as you go. So you'll be paying monthly streaming fees as you go. All right, now let us calculate this. So let's start first with the decoder, revenue from the decoder. The decoder one is easy because we have a fixed amount, right? So I'm just gonna do this. Let me use black. Okay, let me use red because black is not gonna show that these are additional. All right, so I want to start with the decoder. Okay, so I'm told I'm paying a once-off fee of 1,400. Okay, and also they mentioned something about the customers that we are receiving as per the periods. All right, so please don't forget we're working with a financial period ends in March. So here we have customers January, February, and March. But there was something they said. They said that once a customer pays, they will only activate these accounts in the next month. All right, I'm trying to look for it. I know I read it with you guys. I was even explaining it to you. Yeah, there's it. It's underneath here. It says to do activates the streaming service on the first day of the month following the signing of the 12-month contract. Remember, they're not done separately, so we can't talk about streaming on its own apart from the decoder. We have to talk about them together because they are sold as a package. All right, so the same calculation I would do with the decoder is the same calculation I would do with the streaming. So when we have to talk about revenue recognition, we are recognizing as both of them have satisfied the performance obligation because they're not done individually. As both are satisfying the performance obligation, we also account for revenue. Guys, you can start putting down your questions. If you have questions, put down your questions on the comment section already. So when I'm done with this question in full, then I'll come to answer it. So you can start putting your questions as we're going. Right, so let's continue. So now that we know that, we are not touching March. So March, we are not going to touch it because it's only going to be activated in April, and April falls out of our financial period. Let me even go back here. Our financial period ends here, and April falls out of our financial period. So we are not touching the April stuff at all. We are not touching April. So let's forget about March. Sorry, let's forget about March. So it's only the 200 and the 280, January and February. All right, and which is only 2 months of the year. It's only 2 months of the year. Remember, we have 12 months period. So the service that is actually satisfied is only for 2 months as a package. Remember, there's a product and a service, so we're going to treat them both the same. Okay, if this was not a package, if I could sell the decoder separately, I'm not going to include that it's only for 2 months. I was not going to do that. Ne? But because they're sold as a package, I'm going to put them together. So this times. Okay, so the what is it? The January, it was 200 people. It was 200 people. That service for them would be, so they will have service in February and in March. They will have service for 2 months. Okay, and then this plus, then another 1.4. Okay, it's not like it's another 1.4, just the calculation, eh? for February, sorry, I just want to get the figure again. 280. February is going to be 280. This is my calculation date is. February is going to be 280, and February they're only going to be streamed for March. So it's only 1 month that performance obligation will be satisfied. Only 1 month. Okay. Right. So we continue. Okay. I know I'm determining my transaction price, but I might as well just calculate the transaction price. If I have to do this separately first to just say what is the transaction price, I would have just multiplied, all right, by the 2. That is it. And then for the revenue, we will then show how much of this is done. Right, I think we should actually just do that. Let's just do that so that you guys will understand this better when I get to talk about it, that side. So what calculation I'm doing here, I'm already going straight to the performance obligation, and I think it may be too much for somebody else. It may be too much for somebody else. So what I'll do, let me just get the price first, and then we'll talk about the performance obligation separately. All right. Yeah, let's get the price first. So for the price alone, we are saying for the price alone of the transaction price, so we're basically going to add the customers. We are basically adding all the customers together. Let me just add the customers. So it's 200, 280, and 310. Okay, if I had to just find the price of this, it's gonna be 1.4 times 200 plus 1.4 rand times 200 plus 280 plus 310. Okay, so that will make up my price. That would have been the price without considering the fact that performance obligation is satisfied or not. If you're not considering that, then that would have been my price. So I'm adding in the bracket first, the small bracket, 200 plus 280 plus 310. This will give me 790 customers. Then if I multiply it by 1,400, so the actual price in this year would have been 1,106,000 for the decoder. All right, don't forget the streaming service. The streaming service is on a monthly basis. Streaming. Okay, this is without considering the fact that performance obligation is satisfied. I want to do that first so that we can continue from there. So the streaming service is 900 rand per month for so many customers. So we said 790, and on a monthly basis. So it's a 12-month contract. This would have been the price on a 12-month contract. 900 times 790 times 12-month contract. So in total, it would have been, I don't know why I'm adding the rand again. I have it at the top. So it would be 8,532,000. Okay, so that would have been that as a package. So the packaged price would then be, you add them together. Now guys, like I said in the beginning, they want a discussion, so you have to discuss what we are doing right now. See what I'm just doing, all the calculation I've just done now. Wait, what am I saying? It's 246. My calculation is not right. Let me do it again. This is not right. So it's 1 million. The number I'm getting is just weird. 1,106,000 plus 8,532,000. Yes, this one makes sense. 9,638,000. I was getting 86 million. I'm like, that's not possible. 9,638,000. This is the selling price, but this is not the revenue. Right, I hope you're understanding it. this is the selling price, but this is not the revenue. This is the transaction price, but that's not the revenue. All right, so that is your transaction price. How did you calculate it? You took the decoder. So you're going to explain this now. The transaction price should be calculated in a way that it includes a package price of both the decoder and the streaming services, and then you start explaining the decoder should be calculated by taking the once-off fee multiplying by the number of customers that we have within the year, which is 200 for January, 280 for February, 310 for March, which makes up 790. If you take it to multiply by 1.4, it gives you 1 million. Do you understand? That's a discussion. Eh? So they don't want this, they want this in words. All right, in a discussion. So a lot of students will put it like this because this is what we are most comfortable with. I'm sure all of us love to do a calculation. Majority of accountants love maths, right? So they want to do the maths out of things, but now when it's a discussion, we want you to explain the maths that you're doing. That is why a lot of people fail CTA, because they're used to doing, but they're not used to explaining what they're doing. Okay, that is why the discussions are going to become more and more and more as you go. As you go, guys, accounting is really going to be falling off the calculation. It's going to be going to the discussion. You have to explain what you have done. We want to be sure that you know what you're doing and not just doing it by cramming. Okay, right, so that's what you will do there. You will explain that. That's your transaction price. Then 4 says allocate the transaction price to the performance obligation. This one we don't have to talk much about it. Remember, we already concluded that there's only one performance obligation, since the individual products are not distinct on their own. They cannot be sold on their own, and therefore we concluded that there's only one package price. There's only one performance obligation. If there's only one performance obligation, then the transaction price will be allocated to that package. All right, so here we don't have to talk much. You will link this. So this part, allocating transaction price to the performance obligation, is going to be linked to where you talk about your discussion on performance obligation. You will link it to say, since the individual products are not distinct on their own, they will only be sold when put together. There's only one performance obligation, and the whole transaction price will be allocated to that performance obligation. All right, so that is what you're gonna say on that part, on that aspect. Right, then this is the last one where I was doing my calculation nicely, and I decided to leave it and do it here with us now. I decided to leave it so that it can make sense. Okay, so this is what happened. To recognize revenue, right, performance obligation must be satisfied, and it can be satisfied in 2 ways. Number 1, at a point in time, and number 2, over time. Okay, I wanted to explain this so that when I bring the calculation, it will not make sense. So it must be satisfied at a point in time. Normally it will put to a product, not always, but normally it's associated to a product, because with the product, let's say I'm manufacturing a product, it would maybe take me 5 months to manufacture that product so that the product can be in a usable format. So that 5 months that is going to take me, once the 5 months is finished and the product is in a usable format, and I give it to I now deliver it to the customer, then I can say that the performance obligation was satisfied at a point in time. Do you understand? So in that, after that 5 months that is delivered, it was then satisfied at a point in time. Okay. Then overtime is normally associated to a service. All right. Overtime means I will be recording revenue because I will be satisfying the performance obligation as time goes by. For example, if you are registered with a Reka tutoring college, and you pay for, maybe you pay for the whole semester, right? So you pay for the whole semester, but we can't teach you everything in one day. We'll be teaching you as we go, isn't it? So we'll teach you for the whole semester. So maybe we have a class once a week or twice a week, whatever the arrangement is. So it means at the end of the month, I can record that I've taught you 4 classes if it's once a week. Depending, some months are 5 weeks, ne? So let's just say 4. I've taught you 4 classes, so I can only recognize revenue for the 4 classes that I've taught you. Even though in general, let's just say in a semester you have like 30 classes. Let's say you have 30 classes in the semester, and now I've only done 4 classes. So I'm only going to recognize 4 out of the 30 classes that I have already given. to you, which the performance obligation was satisfied. So that's overtime. It's usually associated to a service. That's how we do it. But now in this question, which I love and I find very interesting, is the fact that we have both a product and a service, but they are linked together. So the service thing will win, because at the end of the day, I could have said the products were done, but the service is still continuing. It's still continuing. So if I'm going to account for this as a package, then I have to apply the overtime. Okay, I have to apply the overtime. It means the service is going on. We're still for 12 months, but this year it was only 3 months that we received payment from customers or anything like that. It was only 3 months, and we can't even account the last month, because the last month, remember, it only gets activated next month. All right, so it's only 2 months basically that we are focusing on. So this is the overtime is winning here, because they are being worked as a package. All right, if you have a question here, please post the question, put it on the comment section. I'll come and answer it if maybe you need more clarity on this aspect that I've just touched on now. And this is the most important part of revenue. This is where you're going to do your conclusion. Your conclusion is linked to this last step. For us to be able to know the amount that we're going to recognize, it's this last step that I'm explaining. That is where the conclusion is going to come from. That's the most important part of it. Okay, so the overtime is what we are going to apply here. That is what calculation I was doing before, but I realized that some people could have gotten confused if I had done it that way without explaining it well. All right, so let me go back to that calculation that I was doing. So from here, I'm not taking the full amount. I'm not taking the full amount because the full amount performance obligation is not yet satisfied, and the performance obligation will be satisfied as we go. All right, so I will come here and then redo the calculation on this side. How much of this is actually going to be recognized? The actual revenue recognized during 2023 financial period is, let's go now. So now we start with the decoder. So we're going to start. We are going to start with the January customers. Okay, we're going to start with the January customers. So the decoder once-off fee is 1.4, but we are not going to account for it all once. So in January, yeah, there we go. So in January, in January, my customers, I had 200 customers in January. So I'm going to come here and multiply this by the 200 customers that were in January. January is activated in February, so they'll only use it for February and March. So it's only 2 months performance obligation that is being satisfied in there. 2 months. Plus, then we have the February customers. February customers, I'll take 1.4. Multiply by the amount for February is, the customer's number is 280. In February, it will be activated only in March. So they'll only use it for 1 month. So only 1 month performance obligation will be satisfied. So then I can calculate the total revenue that can be done from the decoder side of things. So, okay, 1.4 multiplied by 200. Let's take out my calculator now. Times 2 divided by 12. This gives me 46,667. I'll then say plus. I'm going to open that bracket. 1.4 times 280 times 1 divided by 12. Remember, I'm not touching on the March one because it's only activated in April, which is out of the financial period. That is why I was insisting that you must know your financial period. If you don't, you're going to make a lot of mistakes. So this is how much I get as revenue coming from the from the decoder side of things. Then from the streaming service, let's do the streaming service. Streaming services. Now from the streaming services, it's going to be as follows. So it's 900 per month. All right. And this month, the very first month, I think we're just following this now. Multiply, so it's 900 multiplied by 200 customers for January, which are activated, of course, in Feb, and they're only using this for 2 months. This is already a monthly something, so I'll just multiply by 2. Then plus the one for February, which is activated in March. It's gonna be 900 Rand multiply by 280 multiply by 1. Okay, or you could have just said that is fine because multiplying by 1 is just the same thing. Remember, March is only activated in April, so we don't use that one. So these are the two for the streaming service. So now we're saying 900 times 200 times 2, which is 360,000 plus open bracket 900 times 280 close brackets. So I'm getting 612,000. So this will make up my total packaged price. All right, revenue actually. This is the revenue that I'm going to account for in this year. All right. So 612 plus 79,333. So this gives me 691,333. This is the revenue, and this is the actual price for the year. Okay. So basically, guys, that is how you do it. So now you come to conclude. Remember, in your conclusion, I've already touched on it. In your conclusion, you are talking about performance obligation being satisfied. So you will say the only revenue that can be recognized for the year is this amount here. You explain how we calculated it. Why are we using 2 over 12? Why are we using 1 over 12? Why we have not included the March stuff. So you will talk about all of that in your conclusion to come to the conclusion of how much revenue should be recognized. Okay, so guys, that is it. Basically, that's how you will do your discussion. Remember, you are putting this in proper sentence, and you are using, I think here I said NB here. You are using the names, the acronyms, the dates, and the places, whatever that is be given in the scenario. Actually applying the scenario. Don't talk about things in general when you're discussing. Don't generalize it. Make sure you're using the company names and all those things in your discussion, so that at the end of the day, you actually give them what they're looking for. If you generalize, it's not a very good method of discussing. Okay, generalizing is not a good method. So it has to be actually make sure that it's customized for that scenario. Okay, it has to be customized for the scenario. That is the best practice of discussion. Right, now another thing is just to be sure that you have actually included whatever you need to include in your scenario. It's always good that once you are done with your discussion, always go back to the question again and read it again to be sure that you have included what they want. So they said, discuss how the revenue recognition and measurement principles stipulated in FAC 15 revenue from contract with customer will affect the revenue amount accounted for in the streaming service contract for the year ended 31st March 2023. Right, did we do that? Yes, I would say yes. Okay, that was done. All right, so guys, do you guys have any question? Please, let's now talk. It's now time for the question. I'm gonna pause again and put back the video so that we can talk about your question. If any, is there something that you want me to maybe clarify again, maybe to go over that again? Do you have any question pertaining this? Please put on the comment section, and it's time for us to now talk. Okay, so I'm waiting for questions. Okay, guys. All right. So question time. All right. So do we all understand how the discussion worked? Is there anybody who has a question or who felt like, okay, maybe I was doing it this way and for me it wasn't working out, mine was not working out? Maybe Naomi put more light into that, on the maybe your approach, or maybe my approach was not so good and your approach is this way, or maybe this is the approach I was using, it just wasn't working out for me. All right, or maybe if you have like a better approach also, please do suggest as well, because it's also going to help other students. All right, okay, first of all, I think the question, this was a general question. will I be able to access the recording of this class? Okay, so guys, after the live session, the video is going to be available also on YouTube. I'm going to keep it on here on YouTube, so you'll only be able to get it here. So if you want to watch it again as many times as you want, it's going to be available on YouTube. It's going to be available. Yes, you are going to see the recording. Can you please explain why we are not including March? Okay, so they did put a sentence there. They indicated on the sentence to say that the streaming service is only activated the month after. Okay, so once you pay for the service, they will only activate it the next month. In meaning that the March one is only activated in April. And when you go to our financial period, our year ends on the 31st of March 2023. So if they're only activating it in April 2023, it means that it will not be included in the current financial period. All right, because that one falls in the next financial period. That is the reason why we are not including the March balance. Okay, so that was Sinovuyo. I hope you are understood. I hope you understand what I explained. I hope it's clear now. So March is not included because March is only activated in April, which is out of our financial period. All right. Any more questions, guys? Bring your questions. Bring your questions, guys. Bring your questions. All right. Please apply that formula. If there's a way that you were doing your discussion before, maybe it was not working for you, apply the formula. Remember, find the base. What is the base that we are sitting on? Find the base, and from the base, you will then be bringing anything. So it will even give you ideas of what to talk about. Sometimes you don't even know how to develop it because you don't have a base. Bring a base and be developing the base as you go. That is the best way to get your discussion. I'm telling you, if you apply this method correctly, you are going to really score 100% in your discussion. Okay, but remember also, it's also about understanding the principle. If the principle is not understood, if the principle is not understood, guys, you won't be able to discuss anything. You will see a story, you understand the story, but in accounting wise, you won't be able to explain it. That's the problem. So make sure that make sure that your principle is intact. Again, guys, the advantage of online exam is that I can have my notes next to me. I can have a summary of my notes next to me. That is the advantage of an online exam. Okay, any question? I'll take one more before I go on. One more question, then I'm going to go to the next part C. One more. Guys, if you have just joined, please like the video. Guys, I want to see the likes going up. If you have just joined, please like the video. And guys, share this video. Share this in the groups where you are coming from. Whichever group that you are in any accounting group that you are in right now. Even if you don't share the link per se, just tell them that, guys, there is a revision happening right now. Just go to Accounting with Naomi on YouTube. There's a revision happening, okay? Tell them about it, guys. Let them join. This is our opportunity to do well. Is our opportunity. This is the last chance you have to pass. This is the last assessment. After this, it is either you made it or you did not make it. Either you made it or not. Okay, so this is your last chance to hit it hard. So please let others know as well. Let them also come and benefit. Yeah, at the end of the session, you can ask any other question that is maybe not covered in this revision. All right, please also note you are free to. You can just write down whatever question you have, just put it aside. Once I'm done with this question, every other question that was not covered here, you are free also to ask. Maybe you were working through a question paper, and while working through a question paper, you got stuck somewhere, and then you want to maybe ask about other topics that we didn't touch on today, and you worked on it and you got stuck and it's not covered on this paper. Please feel free also to ask, but wait until the end of the question so that it does not confuse other people. All right, okay. I see there's no other question. I'm going to go back and continue. We go to the next one. Guys, just have your snacks and food and stuff like that, drinks. You know, it is a whole day and I know it can be exhaustive and focus. Our focus is not always, as brilliant. That's why I'm stopping in between so that I take at least you guys off and then we start again so that concentration comes back again. Concentration comes back again. All right. So have food, have snacks, have drinks, and yeah, around you. But make sure you are writing down. You are writing down, guys. This is to be taken seriously. It's our last opportunity, last chance. Okay, all right, guys. I'm continuing. So let's go back to the question. We are about to go back to real business. I'm gonna put on off my video again, and I'm gonna put up the question so that we can continue to answer. All right. Please like the video. If you just joined, please like. Right, let's continue. Right, back to the question. Okay, so we have done A, we have done B. Now we want to do C so that we can be done with question 1. And you can see, guys, I'm really taking my time. The reason being, I'm taking my time because I want you guys to understand what is it that we are doing. Okay, I want you guys to fully understand what we are doing. So I'm taking my time so that we are not behind and we are not lost. Nobody must be lost. Nobody must be lost. We really want everybody to understand. No one and no one must be lost. Okay, so please don't lose me. I don't want to leave you behind. I want to work with you. Please don't lose me. All right, let's continue. So we are now looking at C. And guys, the discussion mark was like 26.5 mark plus one more mark. So it's 27.5 mark. Like they mean it. Like they mean it, guys. Discussion is here to stay. Psycha is really going that route. It's gonna be discussion. Accountants must be able to explain what is it that they are doing. What are you doing? Are you just cramming a format and coming to do us a cram dump? All right, why? Remember, when you guys start working, you would have to be able to explain. Remember, when you do audits, you would have to explain these accounting principles that we are learning here. Okay, although you're not going to be sitting on it like doing it like this, but you're going to have to explain. You'll be able to find if principles were being followed. All right, how do you know that the principle is being followed? Is by you understanding the principle yourself. All right, understanding IFRS 15 will be able to help you figure out if people are doing any fraudulent activity by maybe overstating their sales. How are you able to know that sales are overstated? Just look at the difference here. I want to take us back here. Look at the difference between the overall transaction price and the actual revenue. So this was supposed to be 9,600,000 and something, but the actual revenue is 600,000, 690,000. All right. Okay, guys, those of you that have answered, please also just like let me know if you understood the answer. Please let me know. Yeah, always come back to indicate. You can even put an emoji or something or anything like that. Let me just understand that you really got the answer well, that you understood the answer. Ne? Please let me know. Okay, so like I was saying, just look at that. So imagine a company can actually overstate their profit to say it's, their profit by overstating their revenue to say that their revenue is 9 million when it's supposed to be 600,000. So you as an accountant, you will go there and be able to pick up this. When you're auditing now, you have to know, okay, the revenue was not supposed to be 9 million, it's supposed to be 600. Why? Because they would have given you the information and then you read through the package, you read through the policy of the company, and you now bring in the principle of IFRS 15. It says that was the performance obligation satisfied? So you ask, was the performance obligation satisfied? What is going on here? Was it really satisfied? You understand? Then you check, no, but they did say that no. They mentioned that that they are only going to activate the accounts the next month. So why are they including the 310? And why are they including months that are not yet in the financial period? So this years we did receive the money, but the months were not in this financial period. So what is going on? Do you understand? All right, so those are some of the things that you are actually going to question. But if you don't know that because yourself, Okay, which question is this? Guys, this is assessment 10 is last for last year, 2023. The last exam they wrote last year. I've also put the link of the question on the description, so you can download it from the link on the description. Otherwise, you can get it from my UNISA. I'm not so sure if you have it this year or not, but I've put the question, or I put the link on the description. It's the assessment 10 for 2023, last year's final exam or alternative exam last year. Yes, that's the one we are doing. See, Clay? That's the one we are doing. Right. Okay, so that's all I was trying to explain, guys. It is these discussions are actually forcing us to understand principles, because in the past we were ignoring principle and we were just cramming things, and that's not going to help you when you're actually doing audits. Okay, so let us continue to C. C says now disclose the information that we have gotten. So every other thing that we have done so far, we are going to disclose them all. All right, so we're going to have disclose two notes. We're going to have an intangible note. Guys, intangible note is very, very, very similar to property, plant and equipment, PPE, and I'm sure a lot of us are very good with PPE. It is very, 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 very similar. All right, just that the terms and stuff are changing, but it's very similar. So we're gonna do that note, the intangible asset, and we're gonna do the deferred tax. Please note that the deferred tax, they don't want to include patent. Patent is what we covered in A. So what we covered in A, they don't want to see it in deferred tax notes, not in the intangible note. Intangible asset note you include it, but in the deferred tax note you do not. Okay. Right. Let's continue. C. Right, so the name of the company is To Do Limited. To Do Limited. I want to do notes. Notes for the year ended. Remember, our year end is the 31st March 2023. Okay, and then you number your notes, guys. The numbers don't matter. There's no specific number for a specific note. But when you're doing notes, you have to then follow the structure. So if I started with number 2, the next note must be number 3, then the next one will be number 4. Okay, but it doesn't mean that like I remember in high school, we always thought PPE was not number 3. For us, PPE was not number 3. Not always. No, it's not always like that. So it really depends. Remember, not every company have the same accounts. Every company will have different account depending on the business they're doing and depending on the items they have and what is being affected. So it really depends. So it doesn't mean that PPE will always be note number 3. No, not always. Okay, anyways, so note number 1, I'm gonna have my intangible assets. All right, like I said, intangible asset is very similar to PPE. Okay, so I will have my items. What I've noticed, normally they will have 2, but I don't want us to cram anything. Just go with the information that is given to you, right? Normally, the reason why I'm saying normally they have 2, they want to have one internally developed intangible asset, and they want to have one that is purchased. Usually that's what they want to have, but it's not always the case. Okay, it's not always the case. So then we put on the formats. Remember, everything's supposed to follow your IFRS. They said according to International Financial Reporting Standards, so you must know your format. Guys, don't come up with your own formats. Everything is going to be wrong if this is not how your note is looking like, and you have any funny note or any way but the amounts are correct. You're not going to get anything. Okay, nothing at all. Nothing and absolutely nothing. Right, so let's come back here. So what we want is the carrying amounts. We want the carrying amounts at the beginning of the year. Guys, please write in full when you're writing the exam. Beginning of the year. Then you're going to have your cost, and you're going to have your accumulated amortization. Okay, so in intangible assets we use amortization, but with PPE we use depreciation, which means the same thing. is the lost in value of the asset. All right, it means the same thing, but we just use different terms. So accumulated amortization. Then we're going to have our movements during the year. Okay, we're going to have our additions. Additions are usually at cost. All right, but now in intangible assets, sometimes you can indicate that the addition is due to internally generated intangible asset or purchased assets. All right, so you can indicate that to say addition from internally generated or purchased. I'll just say addition. Addition is addition. All right, addition. This is when we are actually acquiring the assets. Yeah? Then we can also sell the assets. We're going to have disposal. Disposals must always be counted for at carrying amount. Now, please take note that disposal is not only the sale of assets. All right. Disposal can be that we have sold the asset. Disposal can be that we have written off the assets. All right. Disposal could be that we have replaced the assets. Disposal could also be, remember, written off could be due to damage. The asset is damaged. So as long as we are taking this asset out, we'll treat it like that. Okay, it's out. Right, it's damaged, it's written off, whatnot. We treat it as a disposal. So it's not only when it is sold, when it's also being exchanged or anything like that. And when you have a finance lease, please remember, I think this question, I don't know, I've not finished the question, but so far we have not seen things on leases. But when you have a finance lease, let's say you are the lessor and you have a finance lease, it's also be treated as a disposal. Remember, finance lease is more like we're selling the asset, so we'll also treat it as a disposal when you have a finance lease. Right. Then what else can we have? Let me put this one in color. We can also have impairments. Impairment, we can either have an impairment loss or we can have a reversal. A reversal is going to be positive, a loss is going to be negative. All right. Then of course amortization. Amortization should be for the whole year, just like we do with depreciation. Amortization for the year. Now please take note, just like depreciation, amortization will include amortization of the old assets, amortization of the new assets, and amortization of the sold assets all together. Right? Old asset will be for the whole year. This will be old asset is for the whole year. New asset, it starts when the asset is acquired until the end of the year. And then sold asset is from the beginning of the year until the asset is sold. Okay, I repeat, old asset is for the whole year. New asset, you start accounting for amortization when the asset is acquired until the end of the year. Or a sold asset is when you account for it from the beginning of the year until when the asset is actually sold. So the three of them makes up the total amortization for the year, just like depreciation. Remember what I said, they are very similar to PPE. Right, you can also have transfer. You can also have transfer. We can have transfer for different things. It's either we're transferring to or we're transferring from. When it's coming from something, it's going to add. When it's going to something, transferring to something is going to be a minus. And now possibilities of transfer, maybe the intention has changed. I'm trying to think what intention can change in this one. Remember, we can either, an asset can either become an inventory, but that's for PPE. It can kind of become an inventory. PPE also, if I have property, it can become an investment property, right? But that's for PPE. It won't apply with intangible asset. Here, it can move to non-current asset held for sale. So when we decide that we are going to sell these assets within 12 months, we will take it out of here and move it to the non-current asset held for sale. Guys, you see how integrated they are, right? As much as I'm talking about this, I'm already moving to other topics. So it's like that. Accounting is highly integrated, and we need to make sure we master the integration skills of accounting. All right. And then once we are there, we now go to the end. Now there could be other movements in between. I'm just going to leave it like that for now. It depends on the scenario as well. It depends on the question. The question is also going to direct us. All right. So we're going to have carrying amounts at end of the year. Then we are going to have, this is also called the gross carrying amount or cost. You because this may change. It may not be the cost anymore. It may change as well. Gross carrying amount. Then we have accumulated amortization, and if there's impairment, we'll also say amortization and impairment. All right, so they will include impairment as well at the end, even at the beginning, because we could have had impairment last year, which is maybe inverse this year, or maybe not, but we could have had it as well. All right, so this is basically my formats of my intangible assets. Like I said, it's very similar to your PPE. So you put your format down without even reading. We read some of the parts, but some of the parts we have not read, but we can put them down. Okay, so guys, exam technique, always start with what you have already. Always start with what you have already. Okay, so let me start with the patents. I have patents that I've already worked with in A. When I was doing A, I had already worked on patents. So I might as well start with patents because I have it, right? So I'm going to come here and write patent. So patent is my internally generated intangible asset. Ne? You can also maybe indicate that this is internally generated. All right. Then we go on to our patents. What do we have? So we concluded that the actual value that was capitalized was the 1.4 million. Remember, guys, we did this in A. Ne? The 1.4 million was the cost of this patent. So I'm going to come here. And when was this available for use? Very important. The patent was available for use in August 2022, which is the current year. During the year. Yeah? So we did not have an opening balance. Very important. There was no opening balance. We came here. It came as an addition. 1,400,000. The development cost, which was capitalized to the patent. We didn't have disposal. We didn't have impairment, but we had amortization. And our amortization was also calculated above. If I go back to A, this is our real amortization, 46,667. That's the amortization that we had calculated. Okay, so I'm gonna take that, guys. This is the best. You see what you already have, put it down. Just in case you don't finish the paper, I have marks. You can make reference to where the amounts are coming from. So 46,667, you can say A, or you can say, even say part A, right? Because it simply means I'm not going to redo this calculation that was already done, right? So my costs at the end is 1.4 million. My accumulated amortization is the same amortization for the year. This is a new asset. All right, and then I'm just going to calculate my carrying amount. So 1.4 million minus 46,667. This is 1,353,333. Okay, guys, if you have questions, like I was saying, that are not related to this particular question, please remember to stick until the end. Stick to the end, and then when we are done with the question, you can then ask any other question that is not related to this. I'll still assist after that. Okay, so that is basically it. You see that I've already gotten my time, like I've stolen time, if I have to say like that. This is working smart. I just took it, put it there, and I moved. Now somebody else will still go and try to calculate these things. That is wasting time. That is why we don't get to finish the paper. Alright? So use whatever you have that you can quickly, and remember what I was saying in the beginning, read the whole required, so that even when you are going to read the scenario, you already know that this is what they would ask. They asked in C. This is what they asked in D. Oh, I already got this. I'll use this in C. I'll use this one in A. I'll use this one in B already, because you have already read through the whole required. Right. Then we have to look for the other one. Like I said, normally they want to give you the. It's not always like this, I don't want you to claim it, but it's not always like this. But it's usually like this. Normally they want to give you one internally generated intangible asset and one purchased intangible asset. So let's go and look for the purchased intangible assets. So if you look at the question, we have the broadcasting rights. What else do we have? And then additional information in text, and then that's it. So the broadcasting rights, it says here, Tudu started negotiation with TBT Sports on 1 April 2022, which is exactly the beginning of the current year, to acquire the exclusive broadcasting rights to broadcast the UEFA Europa League in South Africa. The exclusive broadcasting rights agreement was signed on 1 June. So this is when we signed, guys. This is when the actual work was signed. But although they were talking in April, it was only signed in June. For a period of 3 years at a cost of 700,000 euro. Please take note that this is euro and this is not South African rand. Now, the moment I'm seeing a foreign currency, already I have to start thinking of the effects of changes in foreign exchange transaction. You see, this is how they integrate questions together. Right. So, then it says there was also legal fees amounting to 250,000 rand. Take notes, rand. See the difference? Please take notes. If you don't pick up this, you will end up getting the wrong figure at the end. One is a rand value, the other is a euro. All right, so it's not the same. And we remember the principle of working with like terms. We have to work with like terms. Apples with apples, bananas with bananas. I cannot mix them. They have to be like terms. Yeah? You cannot mix them. Okay, guys, if you have not liked the video yet, please like the video. If you haven't liked the video yet, if you have just joined us, please like the video. Remember, the question is in the description. The question we're working on is assessment 10 of 2023. If you've just joined us, yeah? Okay, let me continue. Please pay attention to such things so that you don't make a mistake. Remember, imagine if you go back there and add 700,000 plus 250. That would be wrong because one is a euro, one is a rand. It will be wrong. Okay. Please pay attention to such. So, where was I? Okay, 250 were paid immediately in cash. Oof, sorry. We paid immediately in cash on the acquisition date to finalize this broadcasting rights agreement. Tudu settled 250,000 euro of the acquisition cost immediately on acquisition date, and on 1 June 2022, in cash, whilst the remainder of the acquisition cost is payable on 30 June 2023. Okay, so in other words, they are supposed to pay 700,000 euro, but they only paid 250 on the acquisition date. The rest they were owing. So this is where we raise a foreign creditor. All right, so we raise a foreign creditor of the rest of the things, and then we have to find what was the transaction cost. So in this situation, it's not like it's an item that must be shipped. You know, we always hide behind the free, shipped free of board and all of that. We always hide behind that. So this one is not an item that will be shipped. So it's an exclusive right, and this right was signed. So we're gonna use the date that it was signed as our transaction date. This becomes our transaction date. On the transaction date, that's when we're going to actually account for the item. All right, the intangible asset will be accounted for on the transaction date. Okay, and then it says the broadcasting rights were available for use. This available for use, guys. Now there's a difference between the transaction date and available for use. They can be the same, but it's different. Okay, just because you're given it as being the same does not mean it's the same. Let me explain. The transaction date, this is when we can account for the asset. All right, so the transaction date is the date we're going to use the spot rate of that date to account for the assets. Now, available for use, this is now going to affect the amortization or the depreciation. So it depends. This time we're using amortization. The amortization calculation will begin from, so the asset begins to lose value from the time it is available for use. So this date and the transaction date may be different, or they may be the same depending on what they want to give. But just note the difference is one is when you account for the asset, and the other is when the asset begins to lose value. So we start basically doing our calculation on amortization when the asset is available for use. Okay, please take note of that. Right, so it says the broadcasting rights were available for use as intended by management, as well as brought into use on 1 June. So in this question is the same, né? And on acquisition date, a residual value of nil was allocated to the broadcasting rights. The following dates and exchange rates are applicable. Now, the one we are interested in is the transaction date, which is 1 June, for us to account for our asset. if we had interest, right, let me put this in yellow. If there was an interest calculation, I would have used the average. This one is used to calculate interest. So in a situation where there is interest, like in this question we don't have, in a situation where you have to calculate interest, and then you're gonna use the average exchange rates to calculate your interest. Okay, please write it down somewhere. There was a question like that I think I've done in class with my students. I can't remember what question it is exactly, but it should be on your question bank where they actually had to account for it. Interest. Oh, actually, it's the last year's assessment 6, between assessment 6 and 7. Just check the 2023 assessment 6 and assessment 7. It had a question where they had an effect of changes in the foreign exchange rate, and there was a part where they had to calculate interest. Yeah, so it's between assessment 6 or assessment 7 of 2023. Just check it out. Anyways, let me come back here. I just wanted to explain this in case in your exam there's gonna be that aspect, all right, of interest. And then if for what is this called, foreign exchange difference. Now foreign exchange difference, we're gonna do this at year end, okay, where we're going to translate. So our year end is here, so this date here we're gonna do translation. This is where we're gonna do the foreign exchange difference. Now, are we asked? Is this asked? It's not asked. We didn't ask us to do profit before tax. If you're asked to do a statement of profit before tax, what am I saying? If you're asked to do a profit before tax note or a statement of profit and loss, all right, then you would have needed to calculate the foreign exchange difference. But here we are doing an intangible asset note. It does not affect us. Remember, the foreign exchange difference would affect the monetary side of things, which is the foreign creditor. In this case, we are not doing anything that has to do with it, so it won't be done. But in a situation or in a question where you're required to do that, then remember that you will have to do your foreign exchange difference, either foreign exchange gain or loss, by comparing the year end and the transaction date, also comparing the payment date and the transaction date depending on the financial period as well. Okay, please remember all of that. I'm just trying to fuse this. I'm just trying to open your mind into the same information. But for us, basically, we are dealing with intangible assets. What I need is my cost. What I need is directly attributable cost, and I need my spot rate or exchange rate on the transaction date, and of course my amortization, things like your useful life and whatnot to calculate amortization. That's all I need in this situation. Anyways, it goes further. It doesn't end there. It continues. So they go on to say the Broadcasting Authority held a public hearing during later part of the 2023 financial year to investigate anti-competitive conduct in the broadcasting sector. After months of deliberation, the Broadcasting Authority decided to introduce legislations that will require companies to share. So they introduced legislations that will require companies to share broadcasting rights and to shorten exclusive broadcasting rights. Contract periods with the aim to encourage competition and new entrants into the market. The promulgation of the legislation affected Todo Limited negatively, and on the 31st of March 2023, the fair value less cost to sale and the value in use of the broadcasting rights were estimated to be 7.3 and 7.5 respectively. An applicable pre-tax discount rate of 11% per annum was applied in the calculation of the value in use. Guys, this feels very, very familiar, this question. So I see what they did there. There's a question like this. I've done something very similar like this. Like I can even feel it. I think it's in the FAC3764. Yes, the semester module. There was a question like this in the semester module, very similar. If I show you that question, you'll be like, wow, they've just repeated. They just changed the name of the company. Yeah, basically. Because even the figures, they just changed the name of the company. Even the story, even this UEFA, what is it called? UEFA Europa League was just that. there was the broadcasting authority held a public meeting. It was just the same paragraph. The only thing that changed was the name of this company. So you see, this is the benefit of doing questions, ne? Benefit of doing questions, guys. And the more questions you do, you will remember it like I'm just remembering right now. You will remember it like that. Oh, guys, I've done this before. Imagine you go in an exam and find a question that you've done before. Man, you're gonna kill it. You're gonna kill this exam. Like, you are passing this. All right. So this is just proof. This is just proof, guys, that they repeat question. The only thing they did here is to change the name of the company. All right. How fantastic. Anyways, let's get to the calculations of things. So what do I need? I want my cost, I want my impairment, and all of those stories. And as you can see, there's also a high possibility there is actually an impairment loss because it's affected the company negatively. Once it's affecting the company negatively, the fair value is going to go down, and when it's less than carrying amount, there's an impairment loss. So let's do our calculations. I'm going to just tag these calculations on name it so that it can be clear. All right, first thing, I want to calculate my cost, the cost of the intangible asset, right? So my cost is 700,000 euro. So it's going to be like this. Open the main brackets, then the small bracket. So it's 700,000 euro. And what was the spot rate at the transaction date? So I go to the transaction date on 1 June is 16 Rand 62 cents. 16 Rand 62 cents. Okay, just a minute. My laptop is becoming slow. Okay, it's better now. All right, 700,000 plus multiply by 62. I've lost the value. What? 16.62. Yes, 16.62. 16.62. Right, so that will give me my value. But remember, there was also a legal fees, which is a directly linked cost. Remember, we only having this because of this contract. If we didn't have this contract, we would not have the legal fees. All right, so it is this was given in rand as 250,000. Right, so we take out our calculator, and then it's 700,000 euro multiplied by 16 Rand 62 cents. Okay, then plus 250,000. Okay, so I'm getting here 1,100,000 and actually, is it 1 million? It's 11 million. Sorry, I'm getting 11,884,000. That's my cost. All right. The next thing I need to calculate is my amortization. So my amortization, it's so we're basing it on the 3 years useful life that they mentioned here. 3 years, which for a period of 3 years. This broadcasting right is for a period of 3 years. So we're gonna base it on the 3 years. Also, reading additional information is also good because it will tell you the method in which your amortization or depreciation should be calculated. Here it says to do accounts for intangible assets in accordance with the cost model, and amortization is provided for a straight line. But even without reading this, I'm sure you'll be able to pick it up. But always read. What if they had said that they would use diminishing balance method? So it's always good to read. Anyways, so we also told that the residual value was nil. So I'm just basically taking my cost, which is 11,884,000 over 3 years. But when was this ready for use? Only in June. So if I go back to my financial period in the beginning, my financial period starts from April to March 2023. This one was ready for use on June, 1st of June, on 1 June 2022. So we start counting from June. So it's gonna be June, July, August, September, October, November, December, January, February, March. So that's 10 months. All right, so that is 10 months. So we multiply this by 10. divide by 12. Okay, so once we get that, we're able to calculate our amortization. So it's my 11, guys, this is an 8, yeah, my 11,884,000 divided by 3, this multiply by 10 divided by 12. So this will give me 330,000, sorry, not 300, 3,301,000, then triple ones. Okay, we are told to round off to nearest rand, so no decimals. All right, that's my amortization. Then from there, I can calculate my carrying amount, which will then enable me to calculate the impairment loss. All right, so let's go. First thing first, our carrying amount. So my carrying amount, which is going to be my cost minus amortization. So it's going to be 11,884,000 minus 3,301,111. Okay, guys, I hope you're calculating along with me as well. I hope you're calculating along with me. Remember, I said in the beginning you're supposed to have a book, a notebook, a pen, a calculator, so that you can follow along. Okay, 8,582,889. Right, that is what I'm getting as my carrying amount. From there, I can then calculate my impairments. So what does impairment say? My impairment loss will be equal to carrying amount minus recoverable amount. So already I have my carrying amount, which I calculated in calculation 3, which is 8,582,889. This is coming from calculation 3 minus the recoverable amount I still have to calculate. So I'm going to jump here, go to this number 5 to calculate my recoverable amount. Now recoverable amount is equal to the higher of either the fair value less cost to sale or the value in use. All right, so then what is our value in use? What is our fair value less cost to sale? All right, so they give it to us here. They said the promulgation of the legislation affected To Do Limited negatively on the 31st March 2023. The fair value less cost to sale and value in use. So it's 7.3 and 7.5. 7,300,000 and this one is 7,500,000. Therefore, the higher is 7.5. So that becomes my recoverable amount. So I'll come here and put my 7.5 million. All right, 7.5, that's my recoverable amount. This is calculation 5, and then now I can find my impairment. So we take our 8,582,889 minus 7,500,000. So my impairment loss is actually 1,082,889. All right, so guys, this is the impairment loss. Please remember to be putting your question. Just post your questions as you are getting. When I'm done with the question, this particular question, I'm going to then answer your questions. Okay, so if you have questions or clarifications or anything else, please put it on the comment section and I will answer. If you have just joined us, please like the video, also share the links. All right, so let's continue. So we have done all the calculation that is required for these broadcasting rights. Now that I've done that, I can just go and put them in my notes. All right, so we also do not have an opening balance for that, so I'm going to come here and put broadcasting rights. Guys, I don't know, am I the only person who actually feel like this paper was too easy? I don't know. Looking from the results of people last year, Yeah, ne? Yeah, the results spoke everything, but I don't know. Is it just me? Who else thinks that this paper was too easy? I think at least at this point in time where we are now. This is like the third question we are doing. Who else thinks that it was very easy? Please put it on the comment section if you think this paper was very easy. But I know a lot of people will be guilty to put people will be guilty to put it down. Please put on the comment section. Let's see who's brave. Who actually thinks that this paper was too easy? Please put it on the comment section. Anyways, let's continue. Right. Broadcasting, right? So we did not have an opening balance because we just bought it this year. All right, we purchased it only this year, so it's gonna come in as an addition, and we have calculated. So it was a calculation one, which is 11,884,000. That's my addition. Right, we did not sell, but we had any impairment loss. We also had amortization. Let me start with amortization. My amortization was 3,301,000. So amortization 3,301,111. Right. Please let's put the calculation numbers so that the examiner or the marker will know where to get these. They know that in number one, calculation number one, that's where you actually calculated this figure, so you can get your mark. Let's say this was 3 marks. So you get your 3 marks by the calculation, not by the last figure. They can see the last figure is right, but they don't know how you got it. What if you just you know, by coincidence? What if it was just a coincidence? Somebody just via coincidence decided to, you know, put an amount and it's just coincidentally correct. So they want to see how you came about with the figure. All right. Then so you put the amount there. We have done that. We have done our amortization. Amortization is supposed to be in brackets. All right. Then we have an impairment as well. Let me use a different color for impairment. First of all, the impairment value is 8. The impairment value is 8582889. All right. So we're gonna go there. Right here, it's 885. Let me just double check that I'm checking the correct one. No, that's not the impairment. That is the carrying amount. That is the carrying amount. The impairment is actually 1,082,889. All right. Okay, always double check things. Sometimes also during exam times you can make a mistake like that. You calculated it correctly, but now when you bring it here, you bring the incorrect figure. So just double check that you're doing your things right. So it's 1,082,889. All right, that is how much we have there. That is my impairment, and this is my amortization. At the end of the day, the carrying amount must equal my recoverable amount because the asset was impaired. So my carrying amount would actually be 7,500,000. All right. Then when I get to the cost will remain 11. The cost will remain because we didn't sell or buy additional, so my cost will remain 11,884,000. This is my historical cost. Right. So to calculate the accumulated amortization and impairment, I'll just find the difference between the two. It will just be the balancing figure. So it is 11,884,000 minus 7,500,000. This will give us 4,384,000. Okay, so guys, that is how it works. You can see we are done with the notes, but they did say that we must also include the disclosure of the impairment. All right, and I'm sure it's very, very easy. A lot of people would have actually not included that. They would have probably read it and forget about it. You know, it's exam and there's the pressure and all those things. So it's normal. It's actually normal. But please remember, try as much as possible to remember. That's why I'm always saying, go back and read it again until you're very sure that you've got it right. Okay. So basically with the impairment, you're just going to tell us that we had an impairment, right? I'm just going to write it down. So we're just going to say an impairment loss of, we put the value, payment loss of 1,082,889, okay, occurred during the year, okay, was incurred on broadcasting rights, all right, due to, then you copy that story that due to the fact that they changed the legislation and blah blah blah, you copy that story of the legislation, and from there, once you have done that, full stop. So you tell us that there is an impairment loss of how much and why, and then you also tell us about the recoverable amount. Okay, how did we get to calculate the recoverable amount? So there is also tell us that recoverable amount was based on value in use, and they had mentioned that they used a pre-tax rate amount here. An applicable pre-tax discount rate of 11,000 was applied in the calculation of value in use. So you take that one as well and you write it down, what I've just underlined, ne? So an applicable pre-tax discount of rate of 11% per annum was applied in the calculation of value in use. All right, guys, if you do have a question, please do put the question down so that I can come and answer. All right, so guys, this is basically the intangible asset notes that they wanted you to do. That is how it should be like. Remember, it's very similar to PPE. Already what we are doing, if in case in your exam in the PPE will come, you will just do the same thing. All right, it's just the same thing. Okay guys, so we are moving. So the intangible asset is done. Do you have any question on the intangible asset? Please put it on the comment section. Is there something that maybe you're not clear of? But this one, like I said, it was very straightforward. Hey, I think it was really fair. Guys, maybe your exam is also not going to be bad. If this was really the standard that they gave last year, maybe, who knows, maybe because they know it is your last chance, it is your last opportunity to pass FAC, maybe it's also not going to be bad, because so far really the paper is not as bad. If you have to compare this to the assessment that they did, assessment 7 and 6 last year, if you compare it to this paper is way easier. Okay, right, let us continue. We're also supposed to do the deferred tax notes. You're told not to put any qualitative information on the deferred tax. Just go straight to the point, you know. On your deferred tax note, just tell us what's what. And also in the deferred tax note, they say do not include patents. So don't include patents in your deferred tax notes calculation. All right, so let's continue. So I'll call this note number 2, deferred tax. All right, the calculations. If you decide to do the deferred tax calculation, please take notes, ne? There's a difference between deferred tax calculation. There's deferred tax calculation and deferred tax notes. The notes is where you are listing the items that already have the deferred tax value. The calculation is that one where we have carrying amount, tax base, temporary difference, deferred tax. That's the calculation. So you need to know what am I being asked in the exam. If they ask you for a note and you go there and give them a calculation, there's no mark. They didn't say you should calculate. They said you should give the notes. So there will be no mark for that. Ne? Please take note of those things. Those are some of the things that makes us lose marks in the exam. A note and a calculation are different, and give them what they want. Give them what they want, not what you think. Otherwise, they won't give you the mark that you want. All right. So, since we are not doing patents, of course, I am very sure it's the broadcasting rights that we're going to have. Broadcasting rights that we're going to have. All right. So, if I go back to the question, just to be sure that I've touched on everything, the question touched, so we had broadcasting rights. We had broadcasting right. We had this streaming service. I'm going to come back to that when we had the patents. Patents, they say ignore. Then broadcasting right, we are sure. What about the streaming service? what do you think will actually affect deferred tax on the streaming service? Now, here it was when we're talking about revenue we sold to a customer. With revenue, they are really agreeing with tax. What would have caused that? Okay, now this will come in the form of the revenue that is going to be recognized. If you come back here to the recognition of revenue, remember these people have paid a once-off fee already. They have paid. These customers have already paid. Ne? This 1.4. Remember the 900 is paid per month. That one is fine, but the one once-off fee was already paid. But we only accounted for the one that performance obligation was satisfied. The other, we said this was not yet satisfied. So that portion of the performance obligation of the decoder that was received but which was not yet satisfied, we are going to account for that as a contract liability. So if I have to do a journal here, please forgive me, I'm going back to that deferred tax. Just when I do this, I went back to the streaming service, the revenue question, just to put this in a journal. If I have to put this in a journal, this is how I would have accounted for it, so that it can make sense, ne? So I have my debits, my credits. All right, so we received money. So I would say bank, money received. Okay, money received from the bank side of things. So I received 1.4. Okay, let's do the big bracket as well. I received 1.4 times, so it was, what was the total? It was how many? 200, 280 plus 310. So it was 790. So 1.4 thousand for 790 customers. This is what I actually received. All right, this is what I actually received. Remember, with the streaming service, I'm trying to not include the streaming service because the streaming service is a monthly fee anyways, so it's not a big deal to be included in our calculation because it's monthly anyway. So I'm more interested in the once off here. So in my once off, this is how much I actually received. So there's no need for two brackets. Okay, please take notes. I mean, I'm working on the decoder once off fee. Once off fee. All right, this we are sure we received all the money from all these people already in the bank is sitting there. So if I say 1.4 multiplied by 790, this is how much we received. So it's giving me 11,060,000. Am I right? 1.4. Okay, that's what I'm getting. All right, it's giving me that. Let me see, is that what I got here? It was 1 million. Let me see again. 1.4 790. Okay, it's 1 million, not 11. Okay, again, when the number is suspicious, just do it again. When you feel like this number, but sometimes it can be suspicious and be correct, but just do it again just to be sure. So it's actually 1,106,000, not 11 million. Okay, so basically that is how much was actually received, and then from there we accounted for the revenue. So we had revenue, but revenue, remember, it's a performance obligation has to be satisfied. Performance obligation of revenue has to be satisfied. Right, and we calculated the performance of revenue that was satisfied, and I remember I'm focusing on the decoder. So it was 79,333 that was satisfied. Guys, this is not it doesn't make sense. Remember, debit and credit must be equal. So there is a huge balance that is just sitting there. What is going to happen to that huge balance? You see, this is how you question yourself, guys. Understand principle and question principle when you are busy writing, then you won't go wrong. All right, so already it doesn't balance here, so therefore we had to create an account called the contract liability. This is those amount that we have received but which performance obligation was not yet satisfied. It's going to be the difference between these two figures. Now remember, this is an accounting term. It's not a tax term, it's an accounting term. So tax will not have a balance for this. That is why it's going to cause a temporary difference and a deferred tax. All right, tax will not have a balance for this. So 1,106,000 minus 79,333. This gives me the contract liability figure 1,026,667. Are we seeing that? All right. Okay, so this contract liability is the one that is going to have a deferred tax implication, because every other thing agrees with tax. Ne? So that's my deferred tax option, and of course my broadcasting right will have a deferred tax option. So I'm gonna come here and put also the contract liability. We have calculated that side, and broadcasting right is here. But now what makes up this? I want to just do a calculation as well. I know you could have done this without going to that table, but I just want to go to the table just for us to be clear, because this is a class after all. The deferred tax, my deferred tax at 27%, column, my temporary difference column, my tax base column, and my carrying amount column. Okay, the items that are being affected is broadcasting rights and what's that, contract liability of the streaming service of the decoder. All right, so my decoder, I've already calculated my contract liability up here to be 1,026,000. Now remember, somebody would ask, why didn't you include the services? The services is a monthly fee already, so we only receive it as the month, as per the month. Ne? So it's the exact money that was received, that's what we have. It's not like it was paid in advance. Ne? But the decoder is a once-off. You pay the money and then it's forever for a contract of 12 months. Ne? So that is why I've only included the decoder, just to get the figure, the specific figure I was looking for. So my figure is actually 1,026,667. 1,026,667. This accounting principle, tax would not have a balance for this, and therefore my temporary difference is exactly 1,026,667. Then we take this, multiply by 27%. This will give me 27. It's actually 277 200. 277 200. All right, then this is a liability, guys, and the carrying amount of a liability is bigger than its tax base. This will result to deferred tax assets. Remember those rules. Let me just bring the rules down in case somebody has forgotten. All right, so we have assets, so you have to ask yourself, what item do you have? If it's an asset, rule number one, for us to know whether it's a deferred tax asset or a liability, we're going to say, we're going to check the carrying amount. If the carrying amount is bigger than the tax base of that asset, then this will result to deferred tax liability, which is the rule that I always tell students to remember. Every other thing is opposite. This is a liability. And then rule 2, if the opposite occurs, then the opposite result also occurs, deferred tax assets. Right, then if I have a liability, like in this case a contract liability, and the carrying amount is bigger than the tax base, this will give me a deferred tax asset, which is an opposite of this, deferred tax asset. But if the carrying amount of that liability is less than the tax base of that liability, this will give me a deferred tax liability. Right, then with deferred tax liability, I'm going to have liability, I'm going to have a taxable temporary difference, and with the asset, I'm going to have a deductible temporary difference. Guys, this is more like what you call the cheat sheet. If you can have something like this close by, you will not have a problem when it comes to deferred tax calculation. So this is my deferred tax asset, and deferred tax asset gives rise to deductible temporary difference. Okay, Then the broadcasting rights. I have my carrying amounts of the broadcasting rights. Remember, at the end of the year, it is 7.5 because it was impaired. So it's 7.5, not the carrying amount we had earlier. It's the revalued amount that I'm going to use as my carrying amount for my deferred tax calculation. All right, 7.5 is how much I have at the end of the day. So then we continue. So we now have to calculate the tax base. Tax base now have to be calculated. I'm just going to do this. So how should we calculate our tax base? We go to the information that talks about tax. The information that talks about tax here. So it says here the South African revenue tax is 27%. The capital gain inclusion rate is 80%. You may assume both the tax rates have been effective and remained unchanged. Deferred tax is provided for on all temporary difference using statement of financial position approach. There are no items causing temporary or exempt difference except those identified in the question. The company will have sufficient profits in future against which any unused tax losses can be utilized. The research and development project pertaining to the TV antenna amplifier was not approved by the Minister of Science and Technology, and thus to do will not receive any tax deduction. That is why they say we must ignore the patent. Tax deduction on the developed patent. Okay. And the South African Revenue Service allows a tax allowance on the broadcasting rights in accordance with Section 11F of the Income Tax Act over the period of the broadcasting rights agreement apportioned for a period shorter than a year. Okay, wait, let me understand that. So they will allow over the period of the broadcasting rights agreement apportioned for a period shorter than a year. So in other words, it is the same period that they're allowing. It's the same period that they're allowing for. Okay, so in other words, it goes back to the carrying amounts. Yeah, this is interesting. So it's the same as the carrying amount. I want to explain this before somebody gets confused. So what are they saying? They are allowing a tax allowance exactly the same as the period that the broadcasting rights will last for, and which is the same period, the same useful life we are using for accounting purposes. When we calculated the carrying amounts, that period we used to calculate the carrying amount for accounting purposes is the same one they're using for the tax purposes. So it means my carrying amount is equal to my tax base, right? But now this one is impaired. So I'm going to go back to use my carrying amount, which I had calculated earlier. Carrying amount, yes, this carrying amount is equal to the tax base. All right, that's my tax base. No need to recalculate this. Please, if you do not understand, just write on the comment section so that I can come and cover it. If you do not understand, write on the comment section. I'll come and cover. There's no need to recalculate this. I've showed you guys why. All right, so it's 8,582,889. Then we find the difference now. The difference is 1,082,889, which is exactly the impairment. The difference is exactly the impairment loss. This multiplied by 27%. This is giving us 78,943. 78,943. That is what it gives us. All right, so you have to tell us if this one was a deferred tax asset. So you have to tell us whether it's an asset or liability. This one, carrying amount of an asset is less than the tax basis. This rule. It also gives a deferred tax assets. So now that I have my figures, I'm not going to go and complete my deferred tax note. All right, so to say the one I just calculated now, it's 78,943 assets. And then the other one is 243 assets. Okay, so basically that is what they wanted in your notes. So the total 243. So the total is 356186, and this is a deferred tax asset. Right, guys, so that's actually brings us to the end of question 1. And you see how we took our time because it is class and I have to make sure I explain. I have to make sure you understand. I take my time so that when you are practicing things that you would have missed or did not understand, you would have gotten them from this class and it would have been beneficial for you. That is why we are taking our time and we are moving in slow to include everybody else and so that everybody understands. If you have been following me from the beginning, you should be learning. All right, even if you haven't joined us and you pick up where we are, you should be learning as well. Right, so guys, that was us covering the intangible notes as well as the deferred tax question. All right, so we have come to the end of that. I am now waiting for questions. Please put your questions on the comment section. If there was something I did maybe while I was busy with this notes calculation and there's something that you did not understand, please feel free to ask on the comment section. I will be taking questions now. Okay, I'll be taking questions. Please feel free. Feel free to ask your questions. Or if you also feel like everything is so far so good, just let me know also on the comment section that Naomi, so far so good. Everything you're explaining, I'm understanding. I am really good and I'm really fine. Also, just let me know on this comment section. Let's just know that we are moving together. All right. So I'm waiting, guys. I'm waiting before I move. Let me bring my video. Okay. So I'm waiting, guys. Any question on your side? Let me know. How is it going? Is everything fine? Are you guys saying, Naomi, we are good, we are understanding everything in the class? Let me know. Let's have a chat. Let's have a chat before you go to question 2. Let's have a little bit of a chat, also like sort of like a little break where we actually get to talk to one another. Let's talk to one another. All right. Okay, while we're waiting for questions and stuff, let's just talk a little. Okay, guys, one thing for sure, I said this in the beginning, please avoid panicking. Check your mental state. Check your mental state. I know it's been an exam period. You are exhausted by now. Okay, it's an exam period. By now, you are exhausted. You have studied and studied, sleepless nights. You have been worried. Maybe there were papers that were difficult. Maybe there were papers that you wrote and you just felt like, oh my god, I didn't do well. Maybe the papers that you wrote and could not submit. Ooh, that one is the worst. That's the worst thing that can happen to anybody. Maybe there are papers that you wrote and you could not submit and you are feeling down at this point in time. You're just feeling drained. Maybe you have studied and whenever you study getting to the exam and you just like panic. All right, you just panic and maybe you just forget everything that you studied. So those situations happens and everything. So guys, I just wanted to let you know, guys, you have to let go of everything that has happened for you to do better in this paper. Okay, for you to do well in this exam that is coming up, let go of everything. Let go, guys, let go, let it go. All right, if you're just stuck there, if you are just stuck crying and just sitting on the problem that already happened and you are just not moving on, you just felt like, oh no, because I couldn't submit the other paper, now I don't have the energy. Some people have given up. Guys, you don't. You push until the very end. Like your last, you give it your last, like, hey, this is my chance and I'm gonna give it my best. So I'll say let go of whatever has happened, whatever that is worrying you, whatever that stressed you, let it go and give yourself another chance, guys. Give yourself another chance to write this paper. even if you have not been doing well throughout the year and you feel like it's impossible to still push those marks, give yourself a last chance, guys. You'll be shocked that this paper may just be that solution you're looking for. All right, remember, you have learned from your mistakes. You have made mistakes throughout the first 5 assessments that you've written. You have made mistakes, you've learned, you've made mistakes, you've learned, you've made mistakes, you've learned. So at this point in time, guys, really, now, hey, give yourself some credit. Give yourself some credit. Don't give up, guys. Don't give up. Don't give up. All right, please don't give up. Work on your mental state. Like I was saying in the beginning, if it is music that helps you, please listen to music. If it is gymming that helps you, please gym. Also, if you need to sleep, as well, please also try to sleep. I understand maybe when it's closer to the exam like this, you want to push and push and push. When you get an opportunity to sleep, please sleep. All right, please and please, guys, sleep. I beg you. Rest as much as you can. Rest, talk to people, eat well, and just be good. Your mental state should just be good. So please don't overdo this studying thing. Remember, people are dying now. We are hearing stories of people dying from all over. People are just dying, and we don't want that. We don't want that. Okay, right. So as we are having this chat, please just have something to drink or eat or something. Eat something, drink something. I'm gonna go to question 2 in about should I say 5 minutes? Yeah, let's just do like a 5 minutes something, so I can be able to at least push as much. I may not finish question 2, but I'll do my best to just touch on aspect that I feel like is important that you need to know for your exam and everything. Yes. So just take a drink or something. Eat something, guys. Work on your mental health, please. Okay, it's not over. It's not over. It's not over until it's over. It's not over. So don't give up. Those of you that are already thinking of giving up, don't give up. Even if you feel like you're not so ready. Sometimes you can never really be ready. Just go and write. Go and write what you know. And you have studied the whole year, so go and write. Go and write. Okay. So that's very important. I see there are no questions, so I believe we are all good. Everybody is good. If you have just joined us, please like the video. Oh, thank you so much, Rudo. I actually needed a response. Thank you, Rudo. Okay, so far so good. That is good. Guys, you see, this is actually testing that you have been studying the whole year. If you're sitting in here and I'm doing question and everything is just flowing, it means you've been studying. Maybe it's just the approach that you are using. Maybe it's just that you're not calm. Maybe it's that you're not calm. Okay? Maybe that's the problem. Try to be calm. Try to be calm. Maybe that's what happens when you go to write. You're just not calm. You panic. Also, don't allow the question to intimidate you. You know what happens in accounting? Sometimes we go in the we expecting a specific format, and then they give us a very different format. I always tell students, it's not about the format of the question, it's about the principle that you know. If I know my principle, if I know that calculating profit means sales minus cost of sales, if you like, give it to me in any format of your choice. That's not my business. That's not my business. What I know is that to calculate my profit, it means sales minus cost of sales. Therefore, I am going to look for sales and I'm going to look for cost of sales in any format of your choice. If you like, give it to me. I'm looking for sales and cost of sales. So that's another thing that makes students to panic. They see the question in a format that they're just not used to this format. Like what? What? I remember coming from second year. When you come from second year and you're used to, like, they will give you like maybe revenue amount, cost of sales amount, things like that. It was just numerical. Like the format of the question was just numerical. But guys, when you get to third year, they start giving you a paragraph. to explain something, and you're just not seeing those numerical that you're used to, and you sort of panic. So guys, those are some of the things to intimidate you. So don't allow the question to intimidate you. You know what you know. You know your principle. What you're looking for, you find it. Whether it is a paragraph, if they like, let them give it as a paragraph. Let them give it as a picture, or let them give it as a numerical, or any other format that they want to give it to you. You are looking for your items, whether it is in a picture or what. Look for your item and get your item that you're looking for. Okay, so basically guys, don't allow anything to panic you. Don't panic at all. Just remain calm. If you can't answer it the first time, just go to the next question. Go to the next question, try to answer it, and then you come back. You will gain confidence. So what you need to do is to make sure you remain confident. Keep your confidence. Remain confident. Remain confident throughout the paper. That is just it. If you are losing it, go to the easier question. When you are done with that easier question, come back with full force and hit again. Okay. All right, guys. I think we've had our 5 minutes. I think we're ahead of our 5-minute break. I want to continue. Time is flowing. Time is really flowing. Let's see how much we can do in our question 2, how far we can go, but let's see, try to push as much as we can push, so that guys, at the end of the day, hey, we want to pass. We want great results, great marks, eh? So we want great results. So let us continue now. I'm gonna go to question 2. We're gonna read through the whole scenario just like we did in question 1 as well. We read through the whole scenario, then we begin to tackle one by one. With groups, with groups, usually the questions will be related like that. Maybe we can even do them together while you do A and B and C at the same time. It all depends. So let's just go and check out the question so we can be able to do them. Okay, I hope you have eaten something. I hope you have drank something. I hope you have a fruit or something like that. I've got a fruit here, a watermelon. Just do something, eh? Eat something and drink something. Maybe stand up and walk and then come back again. I need your concentration, full concentration, guys, in this class. Yeah, eat something, guys. You see, so that your concentration level will be up before we continue. Okay. Okay, let's continue. Okay, so it's about to do big. We're about to do serious business now. I'm gonna put off my video and go back to the question. I'm gonna put back the question up so that we can continue. Okay, guys, let's go. Right, it's back to business. Let's go to question 2. Okay, so we're looking at question 2 now, and you see this is what I was talking about, intimidation. So you look at this and you're like, what? Why is it so long? Why is this question so long? So these are some of the mistakes we make in the exam. Don't do that. Just go and read it. Just like you are ready for anything. I always tell students you are basically you are a soldier, and a soldier, when he goes to war, you're not scared of anything. Whatever happens, happens. Rather, it's either you kill it or it kills you. Whatever happens, happens. You get to that point, you are a soldier. So think of yourself as a soldier. Okay, let's continue. All right. Question A. So we are now in question 2, and question 2 has 1, 2, 3, 4, 5. It has 5 parts in it. The last one already, let's take the last one out. The last one says discuss with reason the ethical concerns. Guys, there's always going to be a question like this. This is basically just to boost your marks in the exam. There's always going to be an ethical question, like maybe 3 or 4 marks in the exam. This is for boosting, and this is general knowledge. So I usually don't do this. I'm not doing question. I'm not doing E. Please, E, you do this E as homework. All right, this is just a general knowledge that you're supposed to be knowing. Every accountant should be understanding and knowing ethical concerns when it comes to the decisions that we accountants, especially when you're registered with a professional body that we're supposed to adhere by. This also happens, most of these things you get them in your auditing module as well. Auditing touches on ethics a lot, especially in third year you touch on ethics a lot, on especially people that are registered external auditors, registered auditors, and people that are registered with SICA, the CAA says, all right. So their ethical concern. Most of these things you touch them on your auditing module. All right. So I will not do E. E is just for you. 3 marks. These are usually extra marks. Anyways, let's go to the main thing. Let's go to the main thing. Right. So here we are. A says draft a report. Okay, when they say reports, guys, there's usually a mark for the format of a report. Okay, usually there's a mark there. So it says draft a report to the board of directors of Diapers Corp, that's the name of the company, Diapers Corp Limited, to discuss the correct accounting treatment to record the initial acquisition of Napkins Corp in the consolidated financial statement of Diapers Corp Group in terms of IFRS 3 business combination. Okay, guys, I've also done a video on IFRS 3 business combination. After this, you can watch it after this class. It's on the channel. You can go ahead and have a look. My God, guys, this is too easy. Like, what? Are we for real? And sometimes in the exam, you'll be thinking like this is difficult. So you'll be looking for the difficult part of it. You'll be thinking like maybe they are trying to trick you or anything like that. But wow. Okay, wow. So what they want us to actually give a report on how you should recognize the accusation of another company. All right, and it's 12 marks. Okay, and then you get like for communication and presentation, especially the reports, for you to get the format of the report right, they will give you another 1 mark, guys. But like, wow, guys, this is to tell you guys that your paper really, I don't know, let me not confirm, but I feel like your alternative assessment is actually much easier. Hopefully yours will also be easier. I use the word hopefully, hoping. We are hoping that your paper will also be easier. So we're hoping so. All right. So let us continue. We are only talking about here. You're basically talking about the initial accusation only. Okay. How are you going to account for? What are you going to focus on? Right. So there are basically steps to this. When you look at your study guides, there are actually steps that you actually did, and I covered it in that video. It's even funny because now I feel like that video will even answer this question. I've covered it in that video, the steps that you actually follow at acquisition, like identifying the acquirer, determining the acquisition date, measuring the identifiable assets and liabilities, things like those items. All right, but anyways, we'll come back to it. That's 12 marks, actually 13 marks. Then the second question says prepare the pro forma journal entries to eliminate the intra-group sale of inventory between Diapers Corp and Diapers us in the consolidated statement of Diapers Corp Group for the financial year ended 30 September 2023. I actually feel like this one is much easier to do, but again, intra-group transactions. Do you understand intra-group transactions? Okay, if you don't, guys, I have a video that I did on intra-group transaction, IFRS 10. It was under the IFRS 10 as well. I did intra-group transaction video. You can also check it out after this class. You can check out that video, intra-group transactions. Okay, and then so basically that's what you're doing. This is you're eliminating the intra-group sale of inventory. So first of all, you need to understand what makes up your group, what forms of investment you have in your group, for you to be able to know if it's a subsidiary and a company is very parent and subsidiary. Intra-group transactions are easier than when it has to do with associate or a joint venture. All right, but so you need to know who's in your group first. Okay, that's 10 marks. Then C, it says calculate consolidated gain or loss on the disposal of interest in Napkins Corp. So guys, this is change in accounting I was about to say accounting policy. Not accounting policy. Change in ownership. Sorry, guys. Change in ownership. Now we should expect change in ownership where there's groups, right? We should expect it. They are definitely going to test change in ownership. Wherever there's groups, there's going to be change in ownership. So expect it, okay? Guys, if you have just joined, please like the video and share the link. Thank you. If you've just joined, please like. All right. Change in ownership, that will be 8.5 marks. So we're calculating what was the consolidated gain or loss. So I'm expecting here that we actually sold. We sold, yes, they even said disposal. So we sold it and we have lost control, total control. All right, that is when you're going to calculate the consolidated gain or loss. All right, for the financial year ended 30 September 2023. Our financial period is no longer 31st March that we're used to that time. This is a new company now, and the financial period here is 30 September 2023. Then D says prepare the consolidated statement of changes in equity. Guys, this one, this is the one that if I have to say something in groups may be complicated, is this one. So please go and master your statement of changes in equity. I believe like this is the one that if they want to trick, they can trick you here. Master this part, okay? Changes in equity. Right, so this one looks a little bit like it's going to be a little bit longer question, but I'll try my best to push it. Right, so prepare the consolidated statement of changes in equity for Diapers Corp Group for the financial year ended 30 September 2023. The total column of the consolidated statement of changes in equity is not required. Right, so that is 15 marks. So there it is. This one is nicely apportioned in comparison to question 1, where one question was like 26.5 and the others we just had fewer marks, but this one is nicely proportionate. A is 12 marks, B is 10, and then we have D with 15, and then C with 8.5. So it's nicely proportionate. Right. So let us start. Now, usually when I'm doing groups, I like to understand my group structure first. What group do I have? And all of that will matter so that when I start answering, I'm able to pick up my group. Okay. So it's very important. Now, let's go and understand our group, also our financial period and the rest of things. So we are on question 2 now. Okay, normally we would always tell students start with the format of whatever is being asked, but it's a report anyways. It's a report. So I want to understand what is my group. What forms part of my group? All right, what do I have in this group? What type of group do I have, and all this other information. I want to understand them so that when I attack once, because groups, they're usually interrelated. They're usually interrelated, and I need the other information for the other one and so forth. So I think I'm going to just read and understand my group and attack once. You may not have the time in the exam. Also, what you can do is just put down the format of everything that is being required down without the amount, and then you go and understand your groups and you do your calculations and everything. That will also be a good approach. Right. So first of all, my financial period ends on September 30th of September 2023. So I'm going to start with that one. My financial period and on 30 September 2023. It begins on 1 October 22. All right, that's my financial period. Then let me understand my group structure and we can take it from there. Right, and you see what I was saying. Sometimes this is intimidating students. Just to be able to read this long story, they don't want it like that. They want values. They want this is what the student wants, not those long stories like that. So you guys, don't get used to a specific format. All right, don't get used to a specific format. Stick around, apply every other format that they want there, provided you have your figures. Okay, so let's go. Right, question 2. Okay, it says Diapers Corp Limited. Diapers Corp is a company that manufactures and distributes disposable baby diapers across the African continent. The company was founded in year 2010, and this and is currently the largest supplier of baby diapers within the Southern African market. Diapers Corp is listed on the Johannesburg Stock Exchange and currently owns shares in 2 other companies that are in the same industry. All the companies within the group has a 30 September financial year end. Below are the trial balance of 4 Diapers Corp, Napkins Corp, and Nappies Corp. Nappies are us for the year ended 30 September 2023. So all these companies are basically the same industry. They are all in the same industry, and Diapers Corp has bought investments in them. Usually companies do that. The reason why companies do that is to remain in control, basically to try to keep the markets, to close the markets. They're trying to close the markets. All right. So basically, this is the information given, and then I want to understand further. So I'll go to additional information. I'm gonna read through everything so that when I attack, I attack. All right. First thing first, I understand that Diapers Corp is the parent, because normally the first company is your parent company. All right. So Diapers Corp will be at the top. Now, what is the relationship with others? Let's go read. Okay, so it says here investment in Napkins Corp on 1 October 2020. Very important that you underline your date or highlight your dates. Dates are very important. On 1 October 2020, during the period of COVID-19 pandemic, the board of directors of Diapers Corp resolved to purchase 65% share capital in Napkins Corp in line with the company's strategy to further expand their market share. As from 1 October 2020, Diapers Corp had control over Napkins Corp as per the definition of control in terms of IFRS 10 consolidated financial statement. And on this date, the returned earnings of Napkins Corp were 311,000. It's a credit. Now, once we say an equity is credited, it means it's a positive balance. Eh? Then, the purchase consideration. The consideration was settled immediately as follows. So we had 40,000 ordinary shares in Diapers Corp were issued to the seller. The issue price of the share was 2 Rand each, and the fair value of the share was 250 each. Now, when you are measuring the consideration, you are advised to use the fair value. Okay. So we paid this consideration with 40,000 ordinary shares and with cash amount of 220,000. Okay, that's how the consideration was settled. Then it says on 1 July 2020, this is during the, no, this is before the acquisition. Napkin Corp began a research and development project. I want us to read this properly, because if you miss what I'm about to read right now, you are thrown off. So this is now they've started this. Now I feel the exam has started. The exam has now started. Firstly, they were just introducing, because I felt like that was a little bit too easy what we did. Now the exam has started, so pay attention. Right. On 1 July 2020, Napkins Corp began a research and development project for new diaper technology that will allow for the creation of thinner and more flexible range of diapers without sacrificing absorbency. Then on 1 October 2020, the project met the definition of an intangible asset in accordance with IS 38 intangible asset, but could not be recognized in the separate financial statement of Napkins Corp, as the probability of future economic benefit could not be demonstrated. Now, on the 1st of October 2010, Napkin Corp had expensed development cost to the value of 45,000 in its separate financial statement. The fair value in its separate financial statement, and then the fair value of where am I? Okay, I think I've just lost where I'm reading. Oh, the fair value of 45,000 in its separate financial statement. The fair value of Eh? Sorry, I mixed it. Okay, let me take it from here. As of October 2020, Napkins Limited had expensed development costs to the value of 45,000 in its separate financial statements. Okay. The fair value of the development cost on the 1st of October 2020 was actually 50,000. So the diaper technology is regarded to have an indefinite useful life. All right. All the other assets and liabilities. So if it has an indefinite useful life, it means there's no amortization. We do not account for amortization when an asset has an indefinite useful life. All right. And then now we have to keep testing this for impairment every year because of the fact that it has an indefinite useful life. All the other assets and liabilities of Napkins Corp were fairly valued on 1 October 2020. Now, what does this mean when they're saying an asset is fairly valued? It means that the carrying amount was actually equal to the fair value. So we didn't have an issue there. Okay. We didn't have an issue at all because the carrying amount was equal to the fair value. All right. So that's basically that. Let's continue reading. Then we continue. All the other assets and liabilities of Napkin Corps were fairly valued. I did that. Napkin Corps had been struggling during the pandemic, but the directors of diapers were adamant that the company had potential to improve, especially given the synergies from the other companies within the group. Despite the efforts that were put into place by the board of directors to improve the performance of Napkins Corp post the pandemic, the company still struggled to yield good returns. The board chairperson suggested that to limit the company's exposure to risk, some of the shares in Napkins Corp should be sold. And on 1 June 2023, Diapers Corp, okay, sold 55,000 shares. I just want to go back to the beginning. Okay, so we have to calculate the shares that were purchased initially. Anyways, let's come here. So Diapers Corp sold 55,000 of their shares in Napkins Corp for an amount of 350,000. On this date, Diapers Corp lost control. Take notes. Diapers Corp lost control of Napkins Corp, and the remaining investment was held as a financial asset in accordance with IFRS 9 financial instruments. So we lost control. It's no longer part of the group. It has now been completely removed from our group, and it's just a simple investment. Okay, this is just another investment, just a simple investment. We lost control completely. Right. The fair value of the remaining interest in Napkin Corp was, so the fair value of the remaining interest is now 150 on 1 June 2023 and 155 on September 2023. So in June is the time it lost control. Right. The above disposal has not yet been recorded, has not been accounted for in a separate accounting records of Diapers Corp. And therefore the investment on the trial balance still reflects the cost of the original 65% interest held in Napkins Corp. Guys, what's the story? I think the story is very clear. All right, so we had both interest in this company in 2020, but later on during the current year, we decided to sell some of the shares, because it's not really yielding anything interesting. It's not really yielding anything good. So we decided to sell it. We sold so much shares that we lost control. Now we only left, it's just another investment that we have, but we are not in control anymore. Okay. And so they give us the amount. They also say that this sale was not accounted for yet, so we have to account for it. All right, so that is basically investment in Napkins Limited. So let's now make sense of this. Remember, this is a class. Some of these things I'm doing, you're not going to do it in the exam because you don't have time. Well, like, I'm really gonna explain this one because I felt like this is a very good question. Right, so Napkins Limited. All right, Napkin Limited was acquired on the 1st of October 2020. 1 October 2020. We are currently in 2023, so it's about like what, 2 years ago, because this will end in 2021. Yeah, it's about 2 years ago, right? And then we acquired, they gave us the percentage of how much was acquired, which was 65% was acquired. So 65% was acquired initially, but what is 65% in terms of shares? So you guys have to have the ability to work backwards and work upwards, you know. What was the actual shares that we acquired? So I'm going to check how many shares does Napkin actually issued. How much are they issuing right now? So Napkins, it's going to be this one. So Napkins has 100,000 shares in issue. Okay. Napkins. So they have 100,000 ordinary shares in issue. So I'm going to calculate that. That means it was 65,000. Okay, let me just multiply by. So to calculate the shares, we're going to multiply by 100,000 shares. So basically 100,000 times 65, that is 65,000 shares. So this is how much we had actually acquired from Napkins on the 1st of October 2020. Then later on we decided to sell some of the shares. We decided to sell 55,000 on the 1st of June 2023. We decided to sell 55,000 shares. All right. So I'm gonna do this in a different color. Let me use like maybe a green or something. I'm gonna use a different color because I want you to really follow. Okay, then we get into the current year at 1 June 2023. We then sold 55,000 shares. 55,000 shares are sold at that moment. Then the remaining shares will now be the difference between 65,000 minus 55,000. This is 10,000. So 10,000 shares is remaining, and that is like what, 10%. So if I have to work back, if I work back my percentage, 10,000 shares over the total 100,000 shares in issues multiplied by 100, that's 10%. Right, so what happened? I moved from 65 to 10% and we lost control. Now that information that I've just put there, like I'm saying, you may probably not have time to write all these long stories like this, but this calculation is very important for you to be able to answer and get your answers right. Sometimes the long method works, but there's just no time. So remember what I said in the beginning, in accounting they are testing knowledge and as well as speed. So you may know it, but because you're taking time, you won't even get time to write it down. So that means we have to always find also a shortcut to whatever that we know. But for a class, we can't run away from that. I have to explain. So basically, that's what happened here. For now, I'll leave it there. I'll leave it there for now. I want to go to the other one. So then they also have what is it called? The other company called Nappies Are Us. Let me also understand what is the relationship, what is happening with Nappies Are Us. Okay, so here they said on 1 April 2022, Diapers Corp purchased 40,000 ordinary shares in Nappies Are Us for an amount of 150,000, and full consideration was immediately paid for in cash. On this date, all the identifiable assets and liabilities of Nappies Are Us were fairly valued and equal to their carrying amount. From 1 April 2022, Diapers Corp has exercised significant influence over the financial and operating decisions of Nappies Are Us. The returned earnings of nappies are us on 1 April 2022 is 180,000. Okay, guys, if you have just joined us, please like the video and share the link. Thank you. Okay, I'm continuing. The return earnings amounted to 180,000. So here we all know that when you have significant influence, you're going to be classified as an associate. And we all know that associate, we're going to apply the equity method. Right, an equity method is applied on the associates. Okay, then it says since April 2022, Diapers Corp has sold. So this is what they wanted us to do pro forma journal on. All right. Where's that? Diapers Corp has sold inventory to Nappies Us at a gross profit percentage of 30% on selling price. Very important. Not on cost price like you're used to, on selling price. Remember what I've warned you guys, don't get used to a specific way of answering. That is very wrong, because if they decide to change it, you then become in trouble. So don't get used to a specific way of answering. Okay. Then where was I? On 30 September 2022, Nappies R Us had 60,000 of inventory brought from Diaper Corp. Bought from Diaper Corp that was still on hand, but managed to sell all this inventory by October. All right, so this is September. So we are interested in September, which is our year end. In the current financial year, Nappies R Us bought further stock from Diapers Corp for a total of 620,000. As at 30 September 2020, oh, that was 2022. Okay, 2023. 30,000 of this stock was still on hand. Okay, so last year's balance and the current balance. Right. The net profit of Nappies R Us for the financial year ended 30 September is 64,000. That's their net profit. All right. Remember, we always say share of profit of associates. Okay. So that is it. First, let's put this in order. So again, Diapers Corp purchased Nappies R Us. Nappies R Us. Okay. So in that, this was purchased on 1 April 2022. All right, and they purchased. So this was purchased in 1 April 2022, and they purchased 40,000 issued shares. Okay, so we need to calculate what was the percentage. 40,000 shares was purchased. How many shares does Nappies R Us issue in total? Has issued in total. So they also have issued 100,000 ordinary shares. So these 40,000 over 100,000 shares, multiply this by 100. So this is basically 40%. So we have 40% and we are told this is an associate. This one, guys, this one is a subsidiary. I didn't even write it down. And this one is an associate. All right. So this is actually my group. In my group right here, I have a parent, one subsidiary, one associate. Okay, this is what I have in my group, and now things make sense. When I begin to work now, things are making much more sense than would have been, you know, if I have not read everything. So I'm guessing this one has to do with the ethical concern that we're talking about there. Industry faces a threat, new entrant, blah 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 blah. Okay, that one. Let's just read it so we don't leave out any important things. Okay, so it says new entrant to the market. Of recent, the South African revenue diaper industry faces a threat of new entrants. The increased level of globalization in the last few years has allowed for smaller businesses to source diapers directly from Chinese suppliers and resell them locally at market-related prices. The CEO of Diapers Corp, a qualified CA, I knew this guy had to be a CA because ethical concerns usually they want to tackle people that are registered with SICA, those people that are registered with, you know, a professional body. All right. Okay, so the CEO of Diapers Corp, a qualified CASA, has recommended to the board that the entity should reach out to the Dampers Limited, the second largest manufacturer of disposable baby diapers in South Africa, to come up with a plan that will stop new entrants from dominating the market. This plan would involve the two companies agreeing to keep the prices of diapers the same for the next 2 years, regardless of any inflationary increases. Since the two companies already have a larger market share, keeping the prices constant will not have material impact on their profit. However, the new entrant will struggle to match their prices, and as a result, they would be easily eliminated. Wow, guys, the world is so bad. The world is bad out there. So you see some of us, like you guys students, you are studying right now so you can become big. Some of you are also hoping to start up your business, and there are those giants that are making sure that you don't get into that business, like you don't survive in that business. Wow, hi life. Yes, yes. Guys, these are the things that we go through, ne? These are the things that we go through. Yeah, we are starting out, and you're looking for opportunities. You want to start up companies. You want to start. I mean, the giants are closing the way. They are closing the gates. All right, and these are some of the things that happens. So this scenario that we just read here is not just a scenario. This actually happens. It actually happens. That's why you have these groups. Sometimes they're buying shares within each other so they can control each other and be able to control the whole market. Imagine if I'm buying in an industry that has like four big giants, and I buy control in the four big giants of industry. It means that we are ruling the industry. So that is why even these groups are even being made. We are ruling because I will have a say in all the four giants, and if I have a say in all the four giants, we are basically saying that what I say goes on, and we can close everybody else from coming into the industry. All right. So basically, that is the what is happening here. And guys, remember, it's a general knowledge as well. That's why I'm even leaving that one. You will answer that question, the ethical aspect of this. Was this CA right? Does the board allow this? Does the his professional judgment allowed him to actually advise such, right? So you guys will do that. You answer that. Anyways, let's continue. And if you do feel like you have something, you can also put it on the comment section. That's to add on to that ethical concern of the CA actually advising such a thing that is unethical to the company. All right, what do you think about this? You can put this on the comment section. Anyways, I'll continue. Additional information: Diapers Corp measures investment in Napkins Corp and nappies are asked at cost. That's according to the principle. They are supposed to measure it at cost in its separate accounting record in terms of IS 27 separate financial statement. Diapers Corp Group accounts for associates and joint ventures using the equity method as per principle, again in accordance with IS 28 investment in associates and joint ventures. Diapers Corp Group elected to measure non-controlling interest in acquiry at their proportionate share of the net assets. Okay, so they will basically, our NCI is going to be measured at proportionate share, meaning that NCI is not going to have a goodwill. All right. Then the disposal of the subsidiary does not comply with the criteria of IFRS 5 non-current asset held for sale and discontinued operation. So we are not going to account for it under the non-current asset held for sale. Okay, this is just a normal change in ownership under the IFRS 10 and IFRS 3. Right. Then 5 other investments are measured at in terms of IFRS 9 financial instruments. Diapers Corp irrecoverably elected to present subsequent changes in the fair value of investment in other comprehensive income in the market-to-market reserve. You remember this for the statement of changes in equity. When we get to statement of changes in equity, remember this, that we have market-to-market reserve. Any changes in the fair value will go to market-to-market reserve. Right. All entity within the diapers corp group accounts for property, plant and equipment, and intangible assets according to the cost model. You may assume that profits in all companies were earned evenly throughout the period. Now, why is this assumption important? Guys, this assumption is very important and very necessary. Reason being is that I cannot apportion a profit if the assumption is not made, because it doesn't make sense. Like, practically it doesn't make sense. There's no way I can say that we make the same profit every month. It's not true. Okay? Like, for example, in the festive periods, if we're in retail, festive periods we make more money than any other period. So, like December, I cannot say the December sale and the January sale is the same. It cannot be. Even January and February is not the same. Just because of that Valentine period, sales will actually go up. You understand? But January, people are broke. People don't have money. People don't want to buy. Who wants to buy when children are going back to school? When we are going back to work? You're going back to work. We're going back to school. We want to focus on that. And not just children, even yourself. If you want to start up a qualification, you're starting in January. So nobody wants to spend money on just buying clothes or buying things around, just buying things. Even furniture, just buy. Right? But festive season, people will buy. Besides, people have money in festive seasons because they get bonus and things like that. So it practically does not make sense to say that we make the same profit every month. Like, it doesn't make sense. So that is why this assumption has to be there, that profits were earned evenly over a period. Alright? That assumption is very important. Okay. So we continue. Then it says here, it says the South African normal tax rate is 27% and the capital gain is 80% thereof. You may assume that both the tax rates have been effective and remained unchanged since 28 February 2021. Number 9, all entities in the Diapers Corp group have a 30 September year end, and each share carries 1 vote, and the share capital of each of the companies in the Diapers Corp limited group has remained unchanged since incorporation. All right, guys, we have really read through the whole scenarios. Guys, I advise you, if it is groups, every other thing is fine, but if it is groups, read the whole scenario, please. Read the whole, after reading the whole required, also read the whole scenario, because groups are usually interrelated, like they're actually together. I need to know this information for the other and for this as well. So now that we have read this, we really understand this company. So we have Diapers that has both shares in the other companies. Diapers have both shares in Napkins Corp, which they later sold because Napkin was not doing well. So they decided that now we let it go of control. We're just going to have it as another investment, a simple investment. Then they've also have shares in Nappies R Us, and Nappies R Us, they have significant influence. So they're not controlling the company, but they have influence over the company, and that makes them an associate company. All right. So that's basically it. And then with Napkins Corp, they didn't have intra-group transactions except for this change in ownership. But with Nappies or Us, they had intra-group transaction where they were actually selling inventory. All right, so there was a sale of inventory within the group, which must be eliminated. So basically, that's the story that we have read, and from there we should be able to really do very, very well. We should be able to do very, very well from there. Okay, now what did I want to do? I wanted to first of all work on the analysis of owner's equity so that everything will come together. But before that, let us answer A. It's a report that you're doing, so it's still a theory. We can answer A. Yeah, we can answer A and even B, and then do the analysis of owner's equity because of time. Okay, so let's go through A. A is a discussion. Again, guys, I said with a discussion, come up with the formula. Like I always say, come up with the formula. of how you're going to answer your discussion, so that whatever you do will be coming out of that particular formula. So what are they saying? What is my base really? Let's read it again. It says draft a report. So first of all, guys, you put the format of a report is going to what is the date, what is the subject of what we're talking about, who am I writing to, okay? So basically all of that, it will get you a 1 mark. I know you may be thinking like, what? It's so small. It will get you a 1 mark, but yeah, that 1 mark is very important, eh? So that 1 mark is the difference between 49 and 15, eh? Yeah, so it means somebody can fail because of 1 mark, so don't take it for granted, right? So you do that format, to, dates, from, subject, and all of that. You put those things there. Then we start. So it says draft a report to the board of directors of Diapers Corp Limited to discuss the correct accounting treatment to record the initial acquisition. So this is the base. Initial acquisition of Napkins Corp in the consolidated statement of Diapers Corp Group. Guys, whatever I'm doing must sit on initial acquisition. All right, that will be my formula in here. Remember to apply every other thing that I told you guys when we started. Let me just bring this up. Remember when we started, when we did a discussion this side. All right, please remember everything that I've spoke about here. It's still the same. This is still the same. Follow this method. Number 1, theory or the principle. Number 2, discussion, application of the principle to the scenario. Number 3, conclusion, which basically ties up the conclusion, tie up the required section. You are still following this. Even what I said on this side, even what I said on this side is also still very important. Use the names, acronyms, dates, and places mentioned in the scenario so that your discussion will be more specific to the scenario that we are actually dealing with. Okay, so basically that is also very, very important. Where was I now? Okay, now we're in question 2. Yes, we're in question 2. So every other thing is still important, and I'll still come back to say now create your formula. So my base will then be able to give me the formula that I'm looking for. We are talking about how should we acquire this, the acquisition process, basically initial acquisition. So here I'm looking at initial acquisition. So where here you will actually talk about FAC3764 business combination. Alright, you will actually talk about FAC3764 business combination. That is where your focus is going to be. So your theory will come from FAC3764 business combination. Now, FAC3764 business combination has steps. Okay, it has steps that they put out there that you need to follow once you are accounting for what is it called, an investment, acquisition of an investment, all right, within the group. Okay, so they have the following steps. So I'm gonna put down, that becomes my formula. Whatever I'm gonna discuss, we'll have to come back to this. So we have step number 1, identify the acquirer. Identify the acquirer. All right, step number 2. So that's step number 1. Step number 2, determine the acquisition date. Determine the acquisition date. Step number 3, recognize and measure identifiable assets. Recognize and measure the identifiable assets and liabilities. And liabilities assumed. Right, then step number 4, after identifying the liabilities and what, step number 4, recognize and measure the NCI, which is basically what you're going to do in your analysis of owner's equity. That's what you do at acquisition. You see the at acquisition part of the analysis of owner's equity, that's exactly what you're doing here. So recognize and measure the NCI, non-controlling interest. And once you have measured your non-controlling interest, then you're going to measure the consideration transferred. Step 5, measure consideration transferred. Guys, I have done this in a video which is titled IFRS 3 business combination. The video is in this channel. Please, after this class, you can watch it, or whenever you want to get a further understanding of IFRS 3 business combination, please go and check out that video. All right. Okay, measure consideration transferred. And once you have measured consideration transfer, the only step that is left now is to determine the goodwill. That's the only thing left now. Determine. Guys, you will see when I do the analysis of owner's equity, all these steps will actually be following. Determine goodwill or the gain on bargain purchase. Right, before I even continue, guys, if you have not subscribed onto the channel, please do so. Let's support this channel. There are a lot of people that are looking for classes like this and are not able to afford and things like that. They don't have opportunities like this. Please suggest these videos. Please share these links to people out there, to people in your groups and wherever you are, student groups and things like that. Please share these links so that they also get access to watch these recordings, which is going to help them with their qualification. Please do subscribe so that we can also grow this channel. The more the channel is growing, YouTube is also able to push it to other people that actually needs this kind of work, which will actually bring value to them. So by liking the videos, sharing and subscribing, you're actually helping push this channel. All right, please do so. If you haven't liked the video, please do like. If you haven't subscribed, please subscribe. Okay, right, I'm continuing with the work. So these are the steps that will be able to answer this question, to be able to recognize the acquisition of a company within the group. You following these steps. Now that we have put down our theory, the next step is now to discuss this to the scenario that we have right there. Okay, so we're now going to be discussing one by one. So who is acquiring acquiring this company? Basically, who is the acquirer, okay, of this business combination? So the acquirer of this business combination, as we all know, as we're all reading, I think this one is very simple. It was Diapers Corp. Remember Diapers Corp? If I come to my group here, Diapers Corp acquired interest in napkins. All right, so you just come here now. So you will discuss these guys in proper sentence, like I was saying earlier. Remember, I'm giving you a formula of what to include. So who is the acquirer? Diapers Corp. Is it Corp? Yes, Diaper Corp acquired. What is it? 65% interest in what is this? Napkins Corp. All right, so that we took it from the scenario, we bring it now. Determine the acquisition date. This acquisition was acquired. We put the date even here. Remember here, 1 October 2020. All right, so you come here, proper sentence. The acquisition was on the interest, so you can say the interest was acquired on 1 October 2020. Okay, just write it in full. Even the date, write it in full. That's what the discussion is. Then recognize and measure identifiable assets and liability. This is very important. So this is now where you're going to measure. So you can talk more about this. Now just talk about this is where we have to measure every asset and liability that we have to the market price, the fair value, to see if there's any changes. All right, and then account for the change that we come across. So you explain what this is, then we apply this to the scenario. So here, when you go back to investment in napkins, here it spoke about the research and development, right? So there was this research and development project that was happening, and we all know that we account the research and development, it's the development cost that makes up the cost of the assets. All right, the development cost makes up the cost of the assets, and therefore that amount that we had, the 45,000 was supposed to have been the cost. However, I'm just reading here, these are the things we read together, right? They mentioned something about that the company did not account for it. I'm trying to see where. Okay, let me start studying from here. On 1 October 2020, the project met the definition of an intangible asset in accordance with the IS 38 intangible asset, but could not be recognized in the separate financial statement of Napkins Corp, as the probability of future economic benefit could not be demonstrated. But it did meet the definition, so it's supposed to have been recorded anyways. Now, as of 1 October 2020, Napkins Corp had expense development cost to the value of 45,000 in each separate financial statement. Okay, so they expensed it instead. Now, the fair value of the development cost on the 1 October was 50,000. So in other words, this development cost was not even accounted for as development cost from the first place. So in other words, if you look at the intangible assets, was not accounted for, so it's basically sitting on zero. And now what we've been presented with is a 50,000 fair value. So we can't even talk about the difference. I hope you guys are following it. We can't talk about the difference in this place because they have not accounted for the 45,000. They have not even accounted for it. Whatever reason that they gave, they saying that no, it's not giving an economic benefit. Guys, you're gonna use all of that in the discussion here. All right, so every other thing was fairly valued except that they had research and development, which was not accounted for separately in the books of Napkin Limited, but it had a fair value of 50,000, which we need to account for we need to account for as we have acquired the investment. Okay, so you're going to mention that part. So I feel like a lot of discussion is going to be done here. So every other assets and liabilities were fairly valued. So you will talk about that, except intangible. Internally, please also mention that this is an internally generated intangible asset, except for the internally generated intangible asset. Then you give the story that they're talking about that whole story there. You can bring down the story of that they had developed, and by on the 1st of October it has met the definition, but they decided not to include because of what. You can bring that story there. Once you bring that story there, now at the end of the day, we have to mention the fact that, again, I'm still here, you have to mention the fact that Napkins did not account for the intangible asset. Let me just say IA, the intangible asset, but expensed it instead. So we have to recognize the full. Now it's going to be full because we're moving from 0, so we're comparing 0 to 50,000, not 45. We are going to recognize the full 50,000 on intangible assets. All right, this we also have to recognize its tax effects, the tax effects that this intangible assets will have on the business. Okay, of course it's an asset that we're just raising, and this asset is going to have a deferred tax liability. Please take note that this has an indefinite useful life, so it's more like it's going to be treated like land. The tax effect, take note of the fact that it has indefinite useful life. Okay, so it's not realized through use, but rather it's going to be realized through sale only. So because of that, this is going to have a capital gain implication. Please take note of that. It's going to have a capital gain implication. If you are unsure, please write your comment. You write your question on the comment section if you want me to touch on something. Okay, so I'm also being informed that network. I'm being informed of network. Okay, please just be aware. I'm being informed of network being bad. Just in case you can't hear me or anything like that, or maybe it becomes blurry or whatever the case is. Yeah. Okay, just be aware. Okay, I'm being notified of that. Anyways, let me continue. Where was I? I was talking about capital gain implication will kick in because it has indefinite useful life. So I'm gonna treat this more like land, right? And therefore it's gonna be, so to calculate my tax, I'm going to have 50,000 multiplied by 27%, but multiply also by the 80% capital gain inclusion rate for this reason. All right, so it will be, the tax part will be 50,000 times 27 times 80. So this will give me 10,800. Okay, because it has an indefinite useful life. It's realized through sale and not through use. All right, so that was that. So step 3 is where you're gonna talk most of your things are gonna be based on step 3. Then once you are done with that, then you're gonna measure your NCI. All right, so that we're gonna measure the NCI. Non-controlling interest are all the other owners that do not have control. It can be many, it doesn't have to be one person, it can be many. Every other owners within the company that do not have control are referred to as the NCI. So we want to show the portion of the NCI that is there. So to calculate our NCI, basically the NCI is going to be as follows. We have to take the portion out of the 100%. So basically, if I take 100 minus 65% that they have control, it means the remaining 35% will belong to the NCI. All right, so we are then told on the information here, if you go down here, we are told, sorry, my laptop is giving me issues now. Okay, it's fine. Then here, somewhere here, they spoke about how should your NCI be controlled. Yeah, number 3. So number 3 says Diapers Corp Group elected to measure non-controlling interest in an acquiree at their proportionate share of the net assets. Yo guys, this thing is not coming well. I think network is really kicking on us now. I don't know what to do at this point. I don't know what to do here now. Let me see. Let me try to see if I can do something to work on the network side of things. Okay. All right, I'll just continue and we'll see how it will go. Let me know if there's any problem on your side. Please let me know if there's any problem on your side. All right, let me just continue. Maybe it will just come around. It will probably come around. Okay. Yeah, let's hope it's gonna come around. Okay, let me just continue guys, otherwise we won't move here today. Please let me know how it is on your side. How is the video? Are you guys receiving it well? Are you guys hearing me and things like that? Because here it says the network is poor. Yeah, let me know on your side, ne? But anyways, let me push because it's almost 2. Is it not time already? Is it not time already? Okay, I think I'm just gonna finish with this one. Yeah, because the video is already very long. I'm gonna have to finish with this one. What I'm gonna do is the remaining section, I can do a video on this one separately. It may not be live, but I'm just going to do a separate video on this one and share it on the YouTube channel. So just keep on checking the YouTube channel. Yeah, keep on checking the YouTube channel. I will do this probably between, definitely not Monday, maybe Tuesday. Let me see when it's Tuesday. Let me see when it's Tuesday, because wow, time. Okay, so Tuesday is on the 30th, 29th. Okay, so yeah, I think whatever I don't do now, okay, I'm just gonna finish with this one. This is what I'm gonna do now. Finishing A, and whatever that is left from B to the other, I'm gonna do that one on Tuesday. Or how about we have a live? But I'm gonna communicate. What do you guys want? Do you guys want a live recording like this on Tuesday? We can do a live recording like this on Tuesday, Tuesday evening. Let me know, guys, what you want, ne? So let me know what you guys want, or should I just record and put and then you guys watch it on your convenient? If you want it live, let me know. If also I should just put the recording you watch on your convenience, also good. But I'll only be able to do that on Tuesday. Okay, so let's finish this one, and then we'll be out for today. Then we'll finish as we finish the other on Tuesday. So let me know, do you guys want a live on Tuesday or just a video? Okay, let me know. Okay, anyways, 35% goes to the NCI, and then you bring, I'm back to the question, guys. Then you take what is written on number 3. You say what is written on number 3 says diapers corp group elected to measure non-controlling interest in an acquiree at their proportionate share. So you take that sentence and bring it here as well. You bring, so I'm just gonna do this, ne? That is number 3 sentence. You bring it there, and once you bring it there now, once you bring that there, it means now the calculation that is going to be done on, what is it called, on my NCI will now be the total equity, that we received, and multiply by the portion that is being there. Okay, so it's going to be as follows. Let's see if we can calculate that. So we're going to take, basically we're going to take the total equity that you would have gotten. The total equity will come from share capital plus returned earnings at acquisition plus any other adjustment, like in that situation we had that fair value on intangible assets, remember that, minus the tax on it. So that will make up the total equity, and that total equity is then going to be multiplied by 35%. We're only calculating the proportionate share. That will be the proportionate share. That will be the value of the NCI. Okay, so I'm sure we're picking it up. That's basically how you're going to calculate your NCI. Right, so on Tuesday, I'm going to do the video. I'm going to continue. I'm going to do the analysis there on Tuesday. That's where I'm going to touch on this calculation. Okay, I'll touch on this calculation on Tuesday when I do the analysis of owner's equity. But this is the format. So it's going to be your total equity, share capital plus return earnings plus the intangible asset, that fair value of intangible asset, minus the tax. All right. Okay, now it looks like it says excellent now. Things are looking fine. Okay, it's fine. So yeah, I think I'm gonna do a live. Yeah, let's do live. But I'm not hearing you guys. What are you guys saying? Some of you are very quiet. If you have just joined us, please like the video. I don't know how many times I should keep saying that, but yeah, please like the video so that YouTube can also push it, to other people. All right. So basically, that is the NCI section of things. Like I said, I'm gonna do the analysis that we're gonna cover it in total. We're gonna cover it the total amount actually. Then, right, and then so that is recognize and measure NCI, and then step number 5. Measure the consideration transferred. Now the consideration transferred does not have to be only cash. I can transfer asset, I can transfer also shares. In this particular question, they have transferred shares and they have transferred cash. All right, so you're gonna talk about that. So your consideration here that was gotten from diapers was actually equals to the fair value. So it's going to be fair value of the share price, the share amount that they're giving, and plus the cash value, the cash elements. All right, so if you check it here, if you go back to the scenario, here, it mentions that they give 55,000 shares, 55,000 shares, and no, not one. I'm looking at the wrong amounts. Oh, it's here. I'm looking at the wrong. That was the sold amounts here. Okay, so it was 40,000 ordinary shares, and the fair value is what you measure it, right? Even if it's being sold, what did I want to say? Not being sold. Even if it is the PPEs, if they're using the PPE to pay, yes, even if they're using the property, plant, and equipment to pay, it's also going to be measured at fair value, right? Every time we're calculating consideration, property, plant will be fair value, share price will be fair value, and then the cash amount. Cash amount, you check the cash as it is. Ne? So in this case, it was 40,000 ordinary share. This 40,000 ordinary share is R2.50 each, and the cash amount is 220. All right, so my consideration will be the fair value of shares, so it's 40,000 shares, all right, multiplied by the fair value price per share, which is R2.50, plus the 220,000 cash. That is how you're going to calculate your consideration. Right, 40,000 times R2.50, that would be 100,000. Plus 220,000. So that plus 220,000, that will be 320,000. So that would have been my consideration received. Right, then lastly, it's step number 6. Step number 6 says determine the goodwill or gain on bargain purchase. All right, like I said, I'm gonna cover this one when I do the analysis of owner's equity, the actual amount, the actual figure, but I'm gonna show you just how to calculate that. Now, to calculate goodwill, all right, to get goodwill or gain on bargain purchase, if it's a positive, it's gonna be a goodwill. If it's negative, is gain on bargain purchase, which is also referred to as excess. If they said excess, it's just the same thing, eh? Right. So how do you then calculate this? Okay, the laptop is becoming slow. All right, better. So this is going to be my consideration. So it's going to be consideration paid plus the NCI. All right, consideration paid plus the NCI minus the equity. All right, and the equity makes up your share capital plus returned earnings, and plus, like in this case, I'll just say other equities or adjustments. Right, so once you do this formula, this is how you would calculate your uh, goodwill or gain on bargain purchase. If the answer is positive, it's a goodwill. If the answer is negative, it's a gain on bargain purchase. Okay, guys, thank you guys so much for staying. My God, it's been 5. Wow, it's only somebody who loves accounting that would actually stay this long. It's been 5 hours of class, and we've been teaching throughout. Okay, Justin, thank you so much for the response. Yes, I'm gonna do another live on Tuesday. We are continuing this question. So what I normally tell the students, please work on it as a homework. Do this as homework so that when we come on Tuesday, you are just basically already, you have an idea of what the question is, than just to come without knowing what's up. Okay, without knowing what's up. Anyways, so guys, we are continuing. Let me just bring back my video. Yeah, let me bring back my video so we can talk a little before you go. Right, you can see I even closed my hair now. It's been work, it's been the whole day. Okay, guys, thank you so much. Thank you so much for joining. Those of you that have actually subscribed, thank you so much. Welcome to the family, guys. I'll be posting a lot of things on accounting. I'll be posting a lot of things on accounting, guys. I'm not only teaching accounting, I'm also teaching you guys. I'm preparing also you guys for the world ahead. So as you can see, I've started a series on Sage. Sage Business Cloud. Sage Business Cloud is one of the easiest accounting systems and accounting software to use. Please do watch those videos as well, guys. You're getting into the world. It's not gonna be we don't do manual accounting anymore. Everything is system. Everything is system. So please go and learn those series that I've started on Sage Business Cloud. Share it with the people around. Share it with your colleagues as well. I'm also thinking of starting a series on QuickBooks, but it's not going to be today. Remember, there's a lot that is happening right now, revisions and a lot of things. But I am also going to start on QuickBooks, and I'm going to also do other accounting systems as well. Please stick around, right? If you haven't subscribed by now, please do subscribe, become part of this family. Hit the notification button so you can get notified of the new videos that I'll be doing. I also have videos where I'm giving study tips and advices. Watch those as well as a student. Remember what I said, guys, mental health is very important. Also, I do videos on Excel. So if your Excel skills are not very good, also check out the Excel videos, okay? Yeah. Please subscribe, please like the video, and please share. If you have not shared now, you can share even later. Share with everybody you know, people that will be maybe interested in accounting. We need the people in the accounting field here in this channel, all right? Because they are the one that actually needs this. Okay, I think there's a question here. What time is the live recording on Tuesday? Tuesday, we're gonna have to do it in the evening because people are going to work. Okay, we're gonna have to do it in the evening. Let's do it at 6. Let's do it at 6 to, let it be like 2 hours, 6 to 8. Yeah, 6 to 8. And if it happens that we have to maybe add an extra time, we'll just see, but it must not go above 9. Let's just say 6 to 9, but we can finish earlier than 9. 6 p.m. to 9 p.m. I'm gonna do it in the evening on Tuesday. I'll put it on the communication on the post today, community post as well, that we are doing it, we are continuing as well. Yeah, so those of you that are here, please let also your colleagues and friends know that we're not able to come today to class. Let them know about the Tuesday as well, that we are continuing the question on Tuesday at 6 to 9 p.m. All right, it may not be a full duration, but we'll finish up. Bring questions as well that you have of other places that you have, maybe you've done questions and you got stuck somewhere and you wanted me to ask. Remember I said I was gonna answer that at the end of the session, but because of time, let's do that on Tuesday. Every other question that was not covered on this one, let's cover it on Tuesday, guys. I hope this video actually was helpful, this live recording. I hope it was helpful, because the most important thing, guys, is that you guys should pass. This is your last chance, and go and hit it hard. If you have questions, please don't hesitate to ask. You can use the email that I've put on the channel description. I've got to put my email there. You can communicate with me via email, and yeah. So let's do that. Let's do that. But most important thing, let's promote this channel. Remember, it's benefited you today. Let it benefit somebody else tomorrow. Guys, enjoy the rest of your day. It was nice having you guys. I'll see you guys on Tuesday. And please, hey guys, there are many videos. Go and check. Go and look for a video that you want and watch it. Okay. Thank you guys. See you guys on Tuesday.